call. Mike McKee's going with short-lived. Just to wrap up the show, short-lived.
Well, I think we're all going to go with short-lived, whether it's grammatically correct as short-lived. It just sounds pretentious. I'm sorry. It does. I'm just going to say it.
You're calling the chairman pretentious. A lot of people agree.
I take real issues.
Coming up tomorrow, Isabel Mateas-Alago of BNP Paribas, Mike Wilson of Morgan Stanley, Matt Lazzetti of Deutsche Bank, and Liz Ann Saunders of Charles Schwab from New York City this morning. Good morning. This was Bloomberg Surveillance. It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
And Davos, you were asking a question of President Trump, and he didn't quite answer the question, and he asked you a question. So the question he asked you was something like, why are you not banking certain groups? What is the answer? I don't think he gave you a chance to really answer that question, but what is the answer to that question?
Well, first off, the Bank of America has 70 million consumer customers and millions of small businesses all over the country, all over the world. And so we bank everybody. But the real question was about overregulation, frankly. And so as you look at what's happened is because the interpretations of AML, anti-money laundering, BSA, Bank Secrecy Act, KYC, know your customer's customer, you know, there's a lot of burden upon the banking system to both report suspicious activity reports and do a lot of analysis. And we have to close accounts, so we can't tell people why we did it. And often we're told by authorities to close accounts. That creates confusion. Another area comes up in this discussion is in the crypto area where the regulator said you can't bank crypto operating companies, employees of crypto companies, et cetera. We are allowed to do, we bank everybody, but the operating company, they said that's a high-risk activity. Ask us for authority, and guess what? You would have never gotten the authority. So that came up as an issue. So at the end of the day, it's about getting these regulations right.
In case you missed it on Bloomberg Insight.
I just think there's a chance that you'll have stagflation. I'm not saying it's going to happen. I don't want the reader to say he's predicting. I'm not. But we have to be prepared for something like that. I think the global fiscal deficits are inflationary. I think the remilitarization of the world is inflationary. The restructuring of trade is inflationary. And this is not all an American thing. You know, with all those things taking place, yeah, you may be surprised.
I spoke to Jamie Dimon. He says that we should actually prepare for stagflation. How do you square that?
I think there's no question that the shock of tariffs are stagflationary. The question is going to be ultimately how high do they settle at? Right now they're at a very high level, highest in 100 years. And how long a period both is this uncertain environment and how long are the tariffs going to last? And the question now is the magnitude of the stagflationary impulse, and we just don't know yet.
Don't miss Bloomberg Insight live weekdays.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jemana Bersachi in Doha, Qatar, and this is Bloomberg.
All right, futures unchanged to kick off the week. 30 minutes until the start of trading. I'm Matt Miller.
And I'm Katie Greifeld. Bloomberg Open Interest starts right now.
Coming up, the U.S. and China resume trade talks in London with tariffs, rare earth minerals, and advanced technology topping the agenda. On the corporate front, though, Apple's AI struggles are in focus. And the media giant Warner Brothers Discovery splits into two publicly traded companies. Plus, the race to run New York City heats up. We'll hear from New York City mayoral candidate and former governor Andrew Cuomo in just a few moments. Katie, what are you watching?
Let's talk a little bit more about Warner Brothers. As Matt said, going to split into two publicly traded companies, one with a focus on Warner Brothers TV and film studios, one with the Discovery brands and cable channels. You can see investors loving a spinoff. Shares currently up about 7%.
All right, and I'm looking at Tesla. It is down again this morning, getting hit by A couple of downgrades. Baird cutting the shares to neutral on mounting competition. Argus slashing its rating to hold. Growing increasingly concerned about the war of words between President Donald Trump and the CEO of Tesla, Elon Musk. Also watching Apple. The shares are doing a little bit less today. I think they're up just barely in the pre-market, 0.4%. Kicking off, though, its annual developers conference today in Cupertino, and investors are hoping the event can jumpstart a much-needed rally because it's been underperforming the rest of the group, Katie.
Well, let's talk a little bit about the broader market that Apple has been underperforming. You can see futures pretty flat. The color is green, but very contained on this Monday morning. Of course, we had a big finish on Friday to end the week, another weekly gain, and there's plenty of catalysts to talk about this week, Matt, from trade talks, progress there potentially with China. Also, we have inflation data coming this week and a big bond auction.
Yeah, I'm very excited. We have on Wednesday a 10-year bond auction. On Thursday, $22 billion of 30-year treasuries, and that's going to be one that we'll be watching closely. Let's turn, though, now to Bloomberg Radio, where Tom Keene and Paul Sweeney are speaking with the former governor, Andrew Cuomo. He's now running for mayor of New York City.
And we welcome Bloomberg Television worldwide. Good morning. As we speak with Andrew Cuomo, he is a governor of the Empire State. He's running for mayor here in a contested primary to get to the election November 4th as well. I want to begin with my family. I'm a Kodak brat from Western New York. Yeah. And I remember, it was like in Mary Poppins when the weather vane changed there. I remember, this is years ago, and a guy who was in the Pittsburgh Pirates baseball organization. It was a fractured New York City, a fractured Empire State. And your father in the middle 80s pieced it together again. I give the clearest memory of Republicans and Democrats in Western New York going, who is this guy? How are you going to piece together a fractured New York City?
Yeah, it's a very good question. When my father took over at that time, the big fracture was upstate versus downstate.
Yes,
right?
You lived it.
Yes, we lived it. And upstate for non-New Yorkers, primarily Republican, leaning conservative. New York City at that time, very, very liberal. So that was the big divide. Now it's basically within New York City, and it's really within the Democratic Party. I mean, we have the Democratic-Republican schism, obviously, in New York City, but the Republican Party is relatively small in New York City. But we are working through this. What is the future of the Democratic Party post-Trump? And that is playing out in New York City and cities across the country.
I'm going to give you a vignette. My Bentley was in the garage today. I had to take Uber to come into work. My driver is Dominican Republic, barely speaks English. He was so pleased to talk to me about you. He said, I'm voting for Andrew Cuomo, and this was his exact language. I am a Democrat conservative. I want to go back to Javits, Ed Koch, all of them. How does the conservative Democratic Party of that Dominican Republican driver, how does it move forward out of this primary where the liberals, the progressives, have been so dominant in the verbiage?
Well, this is what's interesting. I was a crazy liberal all my life, right? My father was the son.
My father used to tell me that.
Yeah. I was the son of a crazy liberal and a crazy liberal. But the progressives have gone so far. First of all, I disagree with the word progressive, right? Like it's a new phrase that they coined. FDR was a progressive. My father was a progressive, right? So it's not a new term, but they are so far to the left that they have eclipsed what were traditionally progressive, liberal, use your word, ideology. And it is unrealistic, and it is counterproductive, and that's what people are starting to find out, especially in this environment. You know, post-COVID, cities are going through a crisis. Another hat, I was the former HUD Secretary, Housing and Urban Development under Clinton. And cities have gone through transformations over time. Post-COVID, this is going to be a major transformation for urban America. You don't have to be in a city anymore, right? The old days, you had to be here. The old days, you had to show up. And cities took advantage of that. You didn't have an option. You have options. It's called mobility. It's called remote work. And cities now have to be more competitive. Economically, they have to be competitive. You can move to a better tax climate, a better weather climate. And cities are just now working through that adjustment, I believe.
Governor, if you were to be elected governor, mayor of this great city, what would be job one on day one for you?
Job one, problem is job one is like 3 jobs.
Okay.
It's public safety, because nothing works without public safety. It's getting the homeless mentally ill off the streets, which plays into public safety. Quality of life. People feel the city is out of control, right? There's a sense of chaos when you walk down the street.
That is correct.
There's a fear when you descend into the subway now. That's relatively new, right? And that has to change. Before you get to the economics and taxes and are we chasing you out, et cetera, the first thing that chases you out is you're just not safe here. You don't feel comfortable here. And I think that's the first crisis.
Well, then to follow on from that, and talking to Laura Namias, our lead on this, Jessica Tisch gets high marks. Can you give Jessica Tisch high marks in her early months of running NYPD?
Oh, she's done a very good job. She has done a very good job.
Can you say, do you reappoint her as that, or do you have someone else in mind? We got to make some news here.
Yeah, we have to make some news. I am not in the, I don't believe in saying who you're going to appoint, who you're not going to appoint. This kind of arrogant until you get the job. I can tell you, I think Commissioner Tisch is doing a very good job. This stability. We went through a number of police commissioners. Each one brought their own tumult and their own transformation. Jessica Tisch is steady. The NYPD feels steady. But the NYPD alone really is not going to be enough to restore to people the sense that I feel comfortable in New York City. It's worth my paying the premium to live here. I pay a premium to live in New York City.
Right.
I'm paying high taxes, but I get X, Y, and Z.
Paul, we just heard that from Charles Cantor.
Exactly
right.
right.
On the Upper East Side.
You mentioned the subway here, the MTA. I don't know. I've been riding this subway for 35 years every day. I tell people the only thing that's changed in 35 years, the cars are now air conditioned. Everything else is the same, which is a good thing. That's a compliment. It gets millions of people around the city every day. However, as governor, you said the city should pay more for the MTA. As mayor, how would you manage the MTA? Because we've got congestion pricing, we've got a big shortfall there. How do we keep this subway riding safely, efficiently?
The first step on the subways is safety, quality of life, getting the homeless, mentally ill off the subways. That's what frightens people. Not just homeless people. Urban environments have homeless people. These are homeless, mentally ill people that threaten individuals, or their presence is threatening. And that has to change. Now, you're right. Was it as bad as it was back in the early 90s? No, but a lot of people weren't here in the early 90s, right? And if you were here, really, Bloomberg, Mayor Bloomberg, post, the city was much safer, much cleaner, felt much different. And this is a dramatic juxtaposition to that.
Andrew Cuomo with us, folks. We welcome all of you on Bloomberg Television and Bloomberg Radio across the nation, of course, out on YouTube. Good morning. And, of course, on the nation, Sirius XM Channel 121 as well. We're trying to get him to stay for 2-3 hours. He's saying, yeah, maybe I can't, but we're going to have a good conversation here with the former governor. I want to get this out of the way right now, and it's on all the allegations of this, that, the other, the COVID stuff, the sex stuff, and that. Let's just get it out of the way so we can move on. The fact is, it's reported you've gone after, not gone after in a collegial way, I'm going to say, you have your own litigation, your own lawsuits. These are all distractions if you become mayor. And the floating out there is the idea, okay, now Mike told me once mayor's a 28-hour-a-week job. I don't know if that's true or not, but let's say it's a full commitment to be mayor. Will you push aside all of the different things you're doing in litigation and lawsuits to focus solely on being mayor? Do you postpone them or just say enough? That part is over. That past is over.
Yeah, look, in these jobs, when I was governor, same is true for mayor, if you don't get sued 5 times a day, you're not doing your job, you know? So you have to be very good at compartmentalizing, to use a word, but handing off pieces that are not currently relevant. And that has to be done no matter what.
We saw some very disturbing images coming out of the city of Los Angeles over the weekend. How do you view just how we deal with immigrants, how we deal with the policing of our cities vis-a-vis the federal government sending in troops? When you looked at the images this weekend of Los Angeles, how did you project that upon New York City?
This gets into President Trump's strategy, I believe. And look, first of all, on the immigration issue, he was very clear in his campaign. He believes it's an issue that works for him. During the campaign, he said he was going to deport criminals, dangerous criminals. And everybody said, yes, support dangerous criminals, of course. Now we're deporting 7-year-olds and we're disrupting families. And by the way, we're deporting people who shouldn't be deported. So that's a change. But this issue works for the president politically. The president is also very good, and I worked with the president in the first Trump administration, worked with euphemism. We had a lot of controversy, but this is a different tempo for him. Wayne Gretzky, skate to where the puck is going to be, not where it was. The Democrats have to adjust. They are skating to where the puck was. This immigration issue, in some ways, is a distraction from what Trump is really doing with cities, which is cutting the budget in a way that is so dramatic that you could really cause major difficulties for urban areas.
Governor Cuomo, pro tip, when you're going to talk a hockey, you're in a mayoral race, you pick Jean Rattel or someone like that with the New York Rangers. You don't go with Gretzky. Andrew Cuomo with us here as we look at this mayoral race. Okay, Robert Kuttner, no friend of yours, writing in American Prospect, he says, did Cuomo peak too soon? You've got the tensions of the primary. If you take the primary, the tensions of a general election with different independent candidates, and that is the present mayor in the back pocket of the president of the United States. And if we get LA, as Paul mentions, here, can you imagine this? I mean, I'll let you pick the geography, Governor Cuomo, but the present mayor of New York, can he protect the citizens of this city, given the relationship with the president after what we've seen in LA?
Short answer, no. And let's remember how extraordinary these issues, what's happening in LA. This is the exact reverse of what normally happens. Normally, it's the local government that makes the decision on how to handle an emergency and calls on the federal government. So a mayor or a governor would call on the federal government and say, I need help, please send the National Guard, or please send in additional federal help. I don't believe there's been a time where the president has sent in federal troops. You'd have to go back to like the 60s, and President Johnson and Wallace, right? That's how far you have to go back. So this is Trump being Trump. This is Trump on this issue of immigration. I'm muscled. It's law and order. These cities, these Democrats, they're filled with illegals, and I'm going to come in, and I'm going to come in hot and heavy. He started in L.A. It will happen in New York. It will happen. He knows the formula, right? It happened in New Jersey.
Is this formula to go after you? I mean, this is anticipated.
His formula is to create chaos in the cities, and he is the voice of law and order. And you know, cities, all those Democrats, that's where all those illegal immigrants are, and he's going to come in and he's going to clean up. The flip side is, okay, create chaos in LA, create chaos in New York, create chaos in Chicago. Pretty soon, you create chaos in the nation, and that's bad for the economy.
So what is the biggest challenge for you in this primary race here, and then potentially in the general election? What do you have to get across?
In a Democratic primary, you now have the tension between post-Trump, what directions does the Democratic Party go? And some people believe we lost to Trump because we didn't go left enough. So I have a Democratic socialist. Really, there's no such thing as a Democratic socialist. It's just a socialist. They use Democratic as a modifier because socialist is a little shocking. But it's a socialist who says dismantle the police. The police state is oppressive. Everything free transportation, free everything, tax the rich. So there's class warfare in there. We'll tax the 1%. The 1% should pay because they're rich and fat and they make money on the rest of us, and everything is free.
Let's migrate there. The Financial Times had that summary article this week, and Andrew Cuomo with us, folks. We welcome all of you on Bloomberg Television and Bloomberg Radio worldwide, and of course here in the tri-state area, Bloomberg 1130 across the 5 boroughs. The FT lined up the haves who are supporting you. You're the guy of choice. And the answer is some of them really are behind Andrew Cuomo, and others are betting this guy might win, so we better get behind with him. How do you say take the landlords, and they gave you X number of million? I would say that's like almost normal politics. But then how do you protect tenants and renters in a city of horrific housing economics?
Yeah, well, first, if you are going to be in elected office, you cannot be influenced by who gives you money, right? That's rule number one. That's like saying to a journalist, well, look at who's taking advertising in your newspaper and write favorable things about the advertisers. Then you're not a journalist. It's unethical. And I've been in an elected office many times. I've raised hundreds of millions of dollars. It can't matter who gives you money. Now, to the extent people are supporting me who are institutional interests, because institutional interests need a city that works, right? They want a city with a future. What they're afraid of is you elect a socialist who tries to give everything away free, doubles the taxes on the wealthy, and the wealthy say, that's it, I'm gone. By the way, we lost 500,000 people since COVID to begin with. You're now going to double taxes, and people will say, I'm going to Florida, I'm going to Texas, etc. It's not worth the premium, especially since the quality of life has deteriorated, and I'm afraid to get on the subways, so why would I pay the premium to live here when I'm not getting the benefit of living here? I'll go to Texas, I'll go to Florida, I'll come back a few times a year. I'll see a play. I can hire a private jet with the tax savings. That's what we have to worry about.
Governor, speaking of Trump's relationship with city mayors, President Trump's Justice Department is investigating you over allegations you lied to Congress about COVID. You said that that's politically motivated, but how afraid are you of the possibility of getting indicted, perhaps even arrested by the Trump administration? That's got to be on the table.
Yeah, no, this is a joke. This investigation is a joke. But there's no doubt that Donald Trump uses the Department of Justice and the justice system as one of the tools in the political arsenal. When I was governor and dealt with Trump in the first administration, he investigated me twice with the Department of Justice. That's sort of like his left jab, just keep throwing it out there.
I want to go back here, and I want to get back to the primary, the election at hand. Laura's saying, okay, all this big picture stuff is great. You got to win a primary. You got to get on to the election. How about 1977? Folks, this is New York City and the 5 boroughs. Bella Abzug took Manhattan. Abe Beame took Brooklyn. Badillo took the Bronx. A guy named Cuomo took Queens and Staten Island, and Ed Koch won. That's how nuts New York City is. Which geography right now is most critical for you in the 5 boroughs for you to take this primary?
Yeah, it's interesting. Back in 1977, the boroughs were more homogenous and sort of class-oriented. That has changed over time. The basic division is you have younger, more activist, more progressive, if you will, voters who identify as socialists. They will say, I am socialist. I say tax the rich. I say everything should be free. Palestine factors in there. Right. And that's one demographic. And then you have a second demographic, which is a little bit older, more mainstream, if you will, and that's the demographic that I appeal to.
You brought up Palestine. Let's go there right now. There's a unique relationship of this city with Israel. Everyone knows this. We see nationwide a new form, a new debate over anti-Semitism. I think of Arthur Levitt. My household happened to worship his father 1 million years ago. Explain to me your relationship with Israel as mayor of New York City. How will that be distinctive given the horror that we see in the Levant?
Well, it's a great question. And it is unique to New York, I believe. If you grow up in New York the way I have, the Jewish community is such an integral part of New York, right? New York is not New York without the Jewish community. Jewish community started coming to New York in 1650, 100 years before the other immigration groups, and they have been in major institutions. So you grow up with the Jewish community. I have 2 brothers-in-law who are Jewish. My son-in-law is Jewish. It's that close a connection. And I've been 100% supportive of Israel. My father was before me. I've done numerous trips to Israel. I was very aggressive supporting Israel. This was the first state to go against boycott, discriminate, disinvestment and sanctions for Israel. So it is a very pro-Israel state.
Paul, get one in here, please.
Governor, no one presumably, arguably, takes the air out of the room more than President Trump. He just demands the media attention in a way we've never seen before. Are you surprised that the Democratic Party, no one has stepped up, no voice has emerged to at least counter some of the policies and some of the arguments coming out of the Trump administration? And would you relish that role at some point?
Well, I'll go back to the Wayne Gretzky quote that I wasn't supposed to use.
Quote a Ranger. You're in New York.
He was a Ranger. He was a Ranger.
Mark Messier, please.
First, the Democrats have to get the cadence of the game. They are coming up a day late, right? I don't believe this. I believe this immigration and Los Angeles, and it's going to get worse, and it's going to be New York. I believe this works politically for Donald Trump. I also believe it masks the budget debate, which is really the consequential debate for urban America short term. And he's onto a new topic now. And the Democrats wind up a day late, because if you're arguing about the budget today, you're missing Los Angeles and New Jersey and the whole immigration debate.
We're going to wrap up here in a moment here for Bloomberg Television and Bloomberg Radio. Andrew Cuomo with his Politico. There was a mayor from Chicago who can be a little spicy named Emmanuel. He's out this weekend, and Rama's all wound up about the weak in the woke Democratic Party brand. And I would say he was basically, he as mayor of Chicago and potentially you as mayor of New York are the ones fighting the fight to get the Democratic Party to get some backbone. Does that lead to a presidential effort in 2028? I mean, is the Democratic Party going to shift back to that centrist tendency that we talked about in 1985?
Centrist, forget the trying to define political ideology. I worked with Rahm in the Clinton administration. It's sort of practical and common sense, right? The Democrats lost to Trump. Why did we lose to Trump? I don't believe Trump won. I believe the Democrats lost. I believe what happened is the Democrats became disconnected from their people. They became disconnected from the kitchen table issues. Talk to me about my mortgage. Talk to me about my job. Talk to me about the economy. Talk to me about public safety. I don't want to hear about these esoteric issues right now when I'm worried about my life today. And do something for me. You're the Democratic Party. The Democratic Party fundamentally believes in the functionality of government, and you haven't functioned. Show me something that you did for me that made a difference in my life. Joe Biden, you were president. What did you do that I can see, feel, or touch? That's where the Democrats blew.
Paul, this is so important. And I want to get back to some of the basic stuff Paul was talking about. I mean, day one, the congestion tax. Day one, bike lanes. Day one, nobody can afford to live in this city. What's the day? Paul asked us earlier. What's your day one mandate to those kitchen table Democrats, independents, and disaffected Republicans?
What they're saying first is make me safe. I'm afraid to take the subways, and I haven't felt that way in 15 years. Make me safe. And that is public safety, that's mentally ill, homeless, et cetera, blending into quality of life. That's job one. And then affordability, I need to be able to pay the rent.
I got 45 seconds because of all the fancy stuff here in the Bloomberg News organization. Your father stopped America with a convention speech. Are you going to be at a convention running for president in the future?
I'm running for mayor, and that's enough.
Andrew Cuomo, thank you so much. Greatly appreciated this morning. Did we get everything in there? I think
so. We did all right. We did all right.
Red Sox beat the Yankees 2 out of 3 this weekend. I thought that was
they got lucky. They got lucky.
So, solid.
Never again. Never again. Andrew Cuomo, thank you so much. Greatly appreciate it, Governor.
Thank you very much.
For your attendance there today. We said good morning.
Really a fantastic interview there with Andrew Cuomo, Bloomberg's Tom Keene and Paul Sweeney in the radio studio, but simulcasting it across the nation and the globe. I think, Katie, one of the most interesting things is that Tom Keene is not only a huge fan of the sport of hockey and has been for his entire life, but he plays hockey and seems not to understand that Wayne Gretzky did play for the Rangers here in New York.
He didn't want to talk about it. You know, who was the other man he was talking about?
Mark Messier.
Yeah, I'm not a hockey person, so it was all lost on me. But a great interview, trying to push Andrew Cuomo to on his future political ambitions, but he was clear he's running for mayor of New York right now. Should we talk about this equity market?
Yeah, let's talk about the market because we've had very little movement in terms of futures ahead of the opening bell, which is in 1 minute from now. We're looking at green arrows. They're just not big gains. And there are a number of really consequential events that could move the market this week.
Absolutely.
And in fact, we're sort of sitting in the middle of one right now. The U.S. is negotiating with China in London.
We know that some of our key people from the U.S. side have arrived in London, of course. Round 2, I think it's safe to call it, of these current trade talks with China. We'll see what they get. It seems like the focus for the Chinese side is those chip exports. The focus for the U.S. side is to get those rare earth metals and minerals flowing once again. We'll see if anything substantial is actually agreed upon or the groundwork being laid. And that's certainly what this market is looking for in terms of the catalyst.
Yeah, absolutely. We also get inflation data out on Wednesday, which I think everyone is pretty calm in terms of the CPI, PCE, PPI picture. But we get the bond auctions this week, which normally are such a yawn. I mean, there's nothing that I can imagine more boring than a bond auction, except for this week, right?
They
the 10-year
matter when they matter.
That's right. We'll have Lisa Abramowitz on to join us Thursday because $22 billion of 30-year bonds will be auctioned off at the U.S. Treasury. You see the opening bells and hear the opening bells there on the NASDAQ and market site. You have Bowman ringing the opening bell, celebrating, I don't know what, but over the last 5 years, I noticed the stock has almost doubled, so that's pretty good. Lionsgate celebrating an independent listing on the NYSE. It's only been a couple of months now, but they have lost 1/5 of the value of their company since they listed.
Well, let's talk about some other specific stocks. Specifically in the media space, we have to talk about Warner Brothers and Discovery announcing that they will separate into two publicly traded companies, splitting its streaming and studios business from its cable TV network. You can see shares up about 10% right now if you round up. Spinoffs have been hot, and this particular spinoff announcement very well received today.
Yeah. It is an interesting story in terms of the individual stocks, I guess. I don't know why we care
We're going to
that
talk
much.
about it. We're going to
No, we will talk about it.
Stay
Also,
tuned. It'll be great.
Apple's Worldwide Developers Conference gets underway today. Investors in need of an AI roadmap for this particular company because the shares are down 19% year to date. You can see they're up a little bit on the day, but it's really underperformed the rest of the Mag 7. It's underperformed the rest of the S&P. Apple has, and this is a company that touches so many others in the global markets. For more on Apple, we're joined by Bloomberg Technology co-host Caroline Hyde here on set. So the WWDC kicks off today, and you know what? Siri still can't do anything close to what Geppetto can do. Why do we need to buy Apple products right now?
That is what they've got to vindicate, and I'm afraid if you wanted some answer to AI existential issues with Apple, you're not going to be getting it. Instead, you're going to be getting, well, a new way to call operating system upgrades. They're going to be named by the year, so we're going to be bracing ourselves for 2026, so 26 across the board, and basically an OS overhaul that means that your products in Apple will all work so much more seamlessly together. But this isn't stopping the analyst downgrades. This is why you see Laura Martin pile on last week, yet more and more cutting their views on Apple. We now have plenty of hold ratings, only about 4 sell ratings, but ultimately they need to show why you're going to be buying the next set of hardware. Yes, it's going to look more beautiful. Yes, it's going to have curved edges. Yes, it's going to have tiny bezels, as we have Mark Gurman reporting. But will it have AI introduced throughout? And he has a great analogy within his story. You've got to read Power On if ever you get that to your email on the weekend. And he's saying basically it's like the auto gas to EV transition. Matt, that's why I bring it up because I know you're going to love it. Basically, Apple makes the best operating system on the street like a gas car. But at the moment, we're sort of getting a hybrid involvement when you're looking to interject Apple Intelligence because it depends upon OpenAI. But other automakers, so other phone makers, have a pure EV that looks beautiful, and we got Google with Android managing to intertwine it within the entire operating system. Thus far, Apple has not made that transition
And
well.
by the way, even in the car, so it used to be that if you drove a car over the last few years that didn't have Apple CarPlay, it was a total failure. Now, General Motors has built an operating system together with Google, right? That doesn't really necessitate Apple CarPlay. You just don't need it. I mean, what they have in Chevy, Cadillac, General Motors cars is good enough that it doesn't matter. And that's a real problem.
Has gone purely cars
I do have to say, I have CarPlay in my Genesis, and I can't imagine living without it. I mean, I can, but to exaggerate the point there. That's one issue, though. I do like the way that our Bloomberg News colleagues framed it in the lead up to this event. When it comes to Apple's struggles, that, okay, you have the fact that it seems like their upgrade cycle isn't looking too hot, they're behind on AI, and that's separate from what's going on with trade policy and trade issues. I mean, at this point, when you take a look and you survey the analyst community that really has fallen out of love with Apple, what is the bigger issue right now?
There's plenty, because also you've got the issues of whether they're going to be getting $20 billion a year from Google in terms of payments to ensure that Apple keeps Google search as its primary offering. That's going to be under the gun. We've also got the worry about what the App Store's future is going to be, if they're going to be curtailed in terms of taking certain payments. Certainly the Epic Gains, Epic Win is going to be an issue there. And then, of course, on top of it, you've got the supply chain headaches, which Tim Cook thus far has not navigated well from a political perspective, it feels like to many. What is the answer? Yes, you can put more into the hands of India and ship them across to the United States, but long term, how is Tim Cook going to respond to President Trump's demands to build and manufacture more in the United States? So you've got trade, you've got the issues of, well, monopolization of certain industries here in the US and what that means from a regulatory perspective. And on top of that, you've got the fact that AI just isn't integrated within the operating system more broadly. So a lot of challenges, and that's why you see the analyst community getting a little bit more negative. In fact, you've never seen less than 60% really of the analysts saying not to buy at the moment.
Okay, Caroline, thanks very much. Very much looking forward to your program today. The new Bloomberg Technology at 11 a.m.
Bloomberg
Is it new?
Tech. It's got a whole new name. It's called Bloomberg Tech.
So you've just shortened the second
We
part.
have.
And that's,
Isn't that
any other
peaceful?
changes, or is that?
We got some nice graphics.
Okay.
Come play.
All right. I will watch. I'll
Europe,
watch.
Asia, they're going to be involved a little bit more. We're a whole new global
I'll watch. Let's get some Americans on that show. Coming up this Friday, Bloomberg Tech Europe also kicked off, hosted by Tom McKenzie. Basically, we only have British people covering technology here at Bloomberg. Let's bring in RBC head of U.S. equity trading strategy, Lori Calvasina. Her team just raised its target to, I think, 5730 for the S&P 500. And I don't know, I'm sure you've noticed, but we're way ahead of that now.
Yeah.
And earnings revisions are going up. So why so dour?
So I would say on your latter point, you know, and I got a bunch of questions on this topic of earnings last week, and I'll say we did raise the target last Monday. So, you know, we've been having this conversation for a while, but on earnings, you know, I think people are maybe overstating the excitement there a little bit. So if you look at the rate of upward revisions, which is my favorite gauge of earnings sentiment, just the degree to which analysts are pulling numbers up, not in terms of the magnitude, but just up or down, yes or no. That stat earlier this year bottomed out at 28.5%. It is now a little above 50%, okay? It's not like we're back to 100% upward revisions or 80% upward revisions where everyone is just yanking their numbers, you know, up, left, and right. If you look at 2025 numbers on a bottom-up consensus dollar value basis, we're still hovering around 264. For next year, we're still hovering around 299, and those numbers have been trimmed. And you know, we've seen 2026 inch up just a little bit, but we're not off to the races. So we think people are kind of making a mountain out of a molehill here.
We actually have built a chart.
Have we?
I don't think anyone knows, but we build charts in the morning and we assign numbers to them, and this one is 322 in the chart library, and occasionally we manage to pull one or two up.
I imagine that there it is.
There
and
we
as
go,
you can
Joe.
see,
Thank you.
You see the white line, the blue line coming up, that is sort of mirroring what you're talking about here. Not exactly off to the races, to your point.
You know, and where we feel, you know, we've been answering this question for the last few weeks, and I would say on purpose, you know, I do go by the numbers, but I did purposefully want to send people the message that we're not right back to where we were in January. So if you think back to that last, you know, kind of China-U.S. trade de-escalation, I was literally getting that question on Monday and Tuesday. Why aren't you just slapping your 6,600 target that you had in January back on? I said the world is not back to where we were in January. And you can see that when you look at these bottom-up growth rates on EPS. You can see it on GDP forecasts. I think the consensus on GDP right now for this year is around like 1.4. It's inched up, you know, it's kind of stabilized. Next year is inched up a tiny bit, but they're still pretty sluggish numbers. And the 2026 number was actually, you know, I think around 2%. So, you know, we just haven't seen, whether it's earnings, whether it's seen economic data, not just RBC economics, not just my numbers, but street-wide, the numbers just haven't gone back to where they were. And our 5730 comes out of a result of our valuation and earnings modeling, and I'm not going to nerd out here and give you all the details on that. But we are baking in a better economic environment and a better inflationary environment than what we were, say, you know, 4 to 6 weeks ago. But again, just not as good as it was.
I think you make a great point, too, that we're not back to where we were in January. And one of the pushbacks I've heard to positive trade momentum is that the Trump administration is putting out fires that they created. So it's a different world there. But I want to go back to the earnings revisions, because you point out in one of your notes from the past 24 hours that estimates have been raised for all sectors except the likes of consumer discretionary, consumer staples, and REITs. So consumer discretionary, consumer staples, the fact that those estimates haven't come up, where does that leave the consumer?
Well, you know, it's interesting. Another stat that we track on earnings is how companies are reacting to beats. And what we saw throughout most of this reporting season was that companies, you know, were outperforming the broad market when they post these earning beats, and arguably those companies, you know, had good outlook commentary as well. And we've really seen that reverse. We're actually not seeing those beats generate pops in the market since we kicked into the heavy part of consumer reporting season. And, you know, if I kind of go through and think about consumer companies versus industrial companies versus financial companies, there's a stark contrast. The financial companies look at the higher level stats and they say, you know, everything's fine, the consumer's still spending. It's actually good that they're being, you know, a little bit more cautious in their spend because they're behaving responsibly. The industrial companies are saying we're going to mitigate everything, pass along pricing, very confident tone. Then you get to the consumer companies and it's hit or miss. It varies a lot between companies, and they're not so clear that they can pass on pricing. They're talking about
weakness under the surface that they're seeing in terms of consumer behavior. So it's not surprising to me that we've, sort of seen those reactions to the releases really stumble in here, because it's not, sort of a clear, rosy picture when you dig into some of these consumer results.
What needs to happen, Lori, for you to get more bullish? I mean, Mike Wilson comes on this show, and, he's got claws, but he still has a 6,500 target for the S&P. He's jazzed.
So look, I'll tell you, the model that we've got for this year, the 2025, and we have like 5 different models, by the way, and 5730 is the median. It's our valuation and earnings work. And, there we're baking in, kind of a GDP number in the 1 to 2% range. So I would really want to see GDP get kind of kicked into that 2% range plus for this year. We'd also want to see inflation numbers, kind of come down a bit more. Our economists are looking for numbers, kind of in the kind of upper 2% range for the end of the year.
For CPI, right? Because PCE is at 2.
Right. We have one model that uses CPI, another that uses PCE. So we'd really want to see inflation come down a bit more, because that's depressing the PE multiple. I will say, though, when you look out longer term, my model for next year, when we sort of input consensus numbers on earnings, different macro variables, there are a few different scenarios we run, but we can get to a range of 6,200 to 6,800. Right. So, we don't feel doom and gloom, but we feel like for where we are right now in the macro backdrop that we have some decent visibility on, we feel like we're kind of fairly valued to a little bit over our skis.
Well, you won't have to wait long, at least when it comes to CPI. Those numbers coming out on Wednesday morning. Got to leave it there. Lori, great to kick off the week with you. That is RBC's Lori Calvasina. Meanwhile, let's get a check on these markets right now, because the S&P 500 almost perfectly unchanged right now, trading on a knife's edge as we await some of those catalysts in the form of trade, in the form of inflation data. Let's take a look at where we stand right now. Almost an even split when it comes to what's gaining and what's losing. 262 names in the green, slightly less than that in the red right now. You take a look at what is trying to drive this market higher. You have the likes of NVIDIA, Meta, Alphabet, Apple. The list goes on. All the names you would want to see, but then you take a look at the downside here, what isn't doing too hot. You have Intuitive Surgical, but then you have the likes of Tesla and Broadcom, Microsoft weighing on this index. So a real push and pull going on. Let's take a look at how this plays out on the sector level as well. You can see up at the top, communication services. That's actually exactly what I want to click into right now, because the sector is up 0.7%, and right at the top, Warner Brothers Discovery. And that's after news that the company is splitting into 2 publicly traded companies, separating its streaming and studios business and its TV network operations by the middle of next year. Let's get a better understanding now with Bloomberg Intelligence media analyst Geetha Ranganathan. And clearly you can see that investors voting with their feet here, saying that this is a good idea. What's your take to this news this morning?
Yeah, absolutely, Katie. So this is something that, all media companies have been challenged with. You have 2 very distinct businesses. One is the TV networks business, which is secularly challenged because of cord cutting, because people are leaving the pay TV ecosystem, but still generates a good deal of amount of, EBITDA and cash. And then on the other side, you have, either the studios business or the streaming business, which up until now has really kind of been pressured by losses. But I think finally we're kind of seeing that business kind of really gain momentum with profitability. And you really have a disconnect here, because you have a growth profile for the streaming business that is extremely bright, and for the TV networks that is not so bright, and kind of having them all under the same umbrella really depresses valuation. So by separating out the 2 businesses with very different growth profiles, what Warner Brothers Discovery is going to be able to do is kind of really narrow that valuation disconnect, and it becomes kind of this positive catalyst for boosting the multiples and valuation.
All right, Geetha, thanks very much. Geetha Ranganathan talking to us about Warner Brothers Discovery and the split that is driving at least one of those stocks higher by almost 10%. Coming up, the U.S. and China restart trade talks. We're live in London next. For the latest, this is Open Interest.
Alex Rodriguez.
And I'm Jason Kelly.
And we're back with more episodes of our show, The Deal.
The theme of this season, On the Road. We're bringing you more behind-the-scenes conversations with the biggest names in sports, business, and culture, like Melody Hobson.
I started to study women's sports like an 11-year-old studies baseball statistics, and I got dangerous in seeing up arrows.
Susie Wolf.
When you're competing, you're not thinking about any fear or any worries of what could happen.
Josh Harris.
You can't do a good deal with a bad person.
Jay Batt.
At the end of the day, there's never been a better time to be a student athlete.
And more. Stay tuned.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
The U.S. and China resume trade talks today in London. Tariffs, rare earth minerals, and advanced technology, as well as maybe student visas, are on the agenda. National Economic Council head Kevin Hassett spoke on Face the Nation yesterday.
Well, you can be certain that there's going to be some tariffs, and the stuff that folks have been saying is going to happen to tariffs is inconsistent with what you and I have talked about before, Margaret. So what's going on, right, is that we've had a trade deficit with China forever and ever because they just want to sell stuff here so that they can create jobs in China and help, control their government so people are unemployed, that it's harder for a dictatorship to run.
Joining us live from Lancaster House in London for more is Anne-Marie Horder, Bloomberg's chief political correspondent and the co-host of Bloomberg Surveillance. So, in that role, Anne-Marie, you hear all the time, they don't just sell stuff here, the Chinese, they also invest in the U.S. They buy our treasuries. Is that going to be part of the discussion today?
I'm not sure. I think really part of the discussion today are two things that both China wants out of this, tangible, and also Washington wants out of this. So what China wants to see, and potentially with the inclusion of Secretary Howard Lutnick, we are going to see that, some easing of export controls. Kevin Hassett, the NEC director, speaking earlier to the American press, talking about the fact that they are going to ease some export controls. The question I have is, what is the red line when it comes to export controls? Is it some recent things we've saw, like jet engine parts, or are they willing to go as far as putting NVIDIA's H20 chips on the table? And then what does Washington really want out of this discussion? They want to make sure that they can get access to the rare earths, the magnets that are used in things like the defense sector, in mobile phones, in the high-tech industry, at a more advanced pace. And we heard that from Kevin Hassett as well. So those are the two big deliverables, which basically mean just a little bit more details and meat from the when the delegations met just a month ago in Geneva. Some other issues likely to come up because these individuals don't always meet all the time. And remember, there is potentially a grand deal to be had. The Treasury Secretary has said that to me months ago. They don't want to fully decouple from China. There could be a grand deal to be had. But I would say today it's really about China getting access to more chips and the U.S. making sure they have those rare earths.
Well, Anne-Marie, you bring up the talks in Geneva, which happened last month, and here we are a month later. How can we be certain, how can either side be certain that we're not going to end up in this situation again where both sides feel like the other side is reneged on whatever they discuss in London this time around?
Well, that's a great question. I think the Treasury Secretary has talked a lot about how a process is in place and they have a mechanism. So I imagine if we do see another bout of escalation as we saw the past 4 weeks, then potentially there'll be another meeting, or what we saw last week, a phone call between President Trump and Xi Jinping, which really led to these delegations, these officials, to be able to meet in London. That really becomes a question when it comes to how much the U.S. is willing to lift and ease these export controls. Because remember, what we saw over the past 4 weeks is a ratcheting up of tension for those export controls. So how much leverage are they going to have going forward to potentially have more export controls, use them on China, and at the same time not make sure that China is going to want to then ratchet back the licensing when it comes to rare earth and magnets. I would say today is really about the de-escalation of the past 4 weeks escalation we saw. But I think what this shows and proves is that to get a grand deal, this is going to take a really long time. And we should remember, during Trump's first administration, the trade war started, the phase 1 deal happened in 2020, but it started in 2018.
Right.
This is a process that takes months and years, not days.
Well, Anne-Marie, you brought up the word leverage, and we don't have much time left, but I want to talk about that a little bit, because the fact that you had President Xi get on the phone with President Trump, something that the Chinese side has said that they didn't necessarily want to do, and then the fact that these talks are happening at all, does that say anything about which side holds the upper hand here?
I think they both have leverage here. They both have different choke points. For China, it's getting access to the semiconductors, and for the United States, it's to make sure that they have access to those rare earths. I think what this shows is that it's very challenging to decouple these two advanced, biggest economies in the world. And even if the United States want to de-risk from China from a national security perspective, they potentially need to make some concessions if they want things out of China. And I think this just proves how difficult these negotiations are.
Anne-Marie, thanks very much. Bloomberg's Anne-Marie Horton there reporting live from London. Coming up in the next hour, Henrietta Trey's of Veda Partners will talk trade priorities as well as the tax bill and the anti-deportation protests in London. That's all coming up on, in Los Angeles, not in London. My head is stuck on the continent. This is Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Bringing you up to the minute economic news whenever and wherever it happens. I'm Jennifer Zabasanja in Luanda, Angola, and this is Bloomberg.
Welcome back to Open Interest. It's time now for our top calls. Some of the analyst action in focus this morning. And first up, Tesla getting cut over at Baird thanks to the Musk-Trump spat and Musk's overly optimistic robotaxi projections. Argus also out, slashing its rating on the company as well. Next up, Lululemon getting cut at Morgan Stanley after reporting a slowing growth outlook. The analyst says increased competition and a shifting consumer mindset will pressure the business. And finally, we have General Mills getting a downgrade from Goldman Sachs. The firm says food companies will face many headwinds, including higher costs, tepid volume, and increasing competition from private label and smaller brands. Matt Miller.
All right, coming up in the next hour, Peter Oppenheimer joins us from Goldman Sachs to talk about the wave of S&P 500 target boost we've seen. And then, as I said, Henrietta Trey's on the protests, the riots, maybe, in Los Angeles.
We'll have to see over the next 3, 6, 9 months how the tariff discussions play out and what does it mean.
I do factor in some effects of tariffs now on inflation, on prices.
I like the idea of the 10% tariff across the board.
I've spent my entire career focused on fiscal discipline. I don't think these people have the foggiest notion what they're doing. And I think DOGE is doing tremendous damage to government.
Elon Musk is probably the inventor of our age, but who understands that we're in the midst of the most profound convergence among technologies.
When we are facing a once-in-a-generation technological disruption,
we cannot close this retirement gap without private-public partnership. We have to have good policy.
Do you think, Dawn, that the market is correct to be, as of now, pricing in 3 rate cuts in 2025?
I would take the other side of that bet.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
News on the Hour, sponsored by Progressive Insurance. I'm Deborah Rodriguez. A third night of anti-ICE demonstrations has wound down in Los Angeles after protesters clashed with police, set Waymo cars on fire, and blocked roadways. Correspondent Elise Preston is there.
National Guardsmen are standing on the ready in front of the federal building. They are armed with shields and batons there to protect the federal building, which is a detention center.
This LA local says he sympathizes with the protesters.
People are taken from their houses, from their workplaces, for no reason.
President Trump called up the guard. CBS's Nicole Killian is at the White House.
This issue is igniting the public and lawmakers on party lines. Last night, President Trump was at Camp David meeting with military leaders, and he isn't ruling out deploying additional troops if necessary, despite Governor Newsom's request to rescind them.
The president says he may also send in the Marines if necessary. NIH researchers and staffers are speaking out about cuts that they say undermine their mission. CBS News correspondent Cammie McCormick reports.
They've written a letter and signed their names to it, which could jeopardize their jobs. But the NIH employees say the administration's policies are wasting public resources and harming the health of people worldwide. President Trump's pick to lead the department has pledged openness and said dissent is the very essence of science. In their letter to him, the staffers say we dissent, putting that commitment to the test.
Ukraine is reporting an unprecedented attack. CBS's Elaine Cobb at the foreign desk.
Ukraine says Russia launched nearly 500 drones overnight, but the Air Force destroyed more than two-thirds of them mid-flight. That was the largest overnight drone bombardment since the start of the war 3 years ago.
Police in Las Vegas say they have identified a suspect, but they haven't found the person yet after 2 people were killed in a shooting in front of the Bellagio Hotel's famous fountains. The city's Undersheriff Andrew Walsh.
The suspect and the victim had previously engaged in some type of conflict using a variety of social media platforms.
Witnesses say they saw the shooter throw a gun in the bushes before police recovered it. An entertainment giant is splitting in two.
Starts Sunday, July 7th on Discovery.
Warner Brothers Discovery, home to the annual summertime TV ritual, says it'll divide itself up into separate public companies, one encompassing movies and its streaming service, HBO Max. The other will include Global Network, CNN, TNT Sports, and Discovery, all in a bid, it says, to keep up with consumers who continue to switch from cable to streaming. The Dow is down 83 points. This is CBS News. There's new research on the safety of skincare products for children.
The study out of Northwestern University finds the most popular videos on TikTok for skin regimens for kids and teens were pricey, offered little benefit, and were missing a key ingredient. Study co-author dermatologist Dr. Molly Hales.
Many of these carry an increased risk of sun sensitivity, and yet, unfortunately, only about a quarter of the daytime skincare regimens included a sunscreen.
The study was published in the journal Pediatrics. Wendy Gillette, CBS News.
With fathers like this, who needs, well, Elon Musk's dad, Errol Musk, says his son made a mistake by quarreling with President Trump. The elder Musk tells the Russian newspaper Izvestia both men were tired and stressed. He predicts they'll patch things up soon, but says Mr. Trump will prevail. Errol's set to appear at a forum in Russia alongside conspiracy theorist Alex Jones. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been in U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
One person's chaos is another person's animal spirits.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
Are people just too exuberant out there?
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Good Monday morning from the Bloomberg Interactive Broker Studio in New York City. To our worldwide audience, Alex Steele and I are here with you. We're streaming on YouTube as well, so head over to youtube.com and search Bloomberg Podcast Live. That's where you'll find us. We're also on your smart TV as well, so you just go to Bloomberg Originals, search there, and that's where you'll find us. Coming up, Brendan Murray, Bloomberg Global Trade Editor, going to give us the latest on U.S.-China trade negotiations. I believe they're over in London here, so we'll get some reporting there. Ann Barry, founder and managing partner of Threadneedle, discuss the latest on these markets. Anurag Rana, Bloomberg Intelligence tech analyst. Apple's Worldwide Developer Conference. Are we going to get any new cool stuff coming out of Apple when their annual conference there? We'll get the latest from Anurag. Geetha Ranganathan, Bloomberg Intelligence. She covers the media business. We got a little bit of an M&A kind of trade here, a breakup story. Warner Brothers Discovery going to split up that company there, see if they can unlock some value for that media company. So we'll break that deal down. But let's get everything started with a Bloomberg Business Flash with John Tucker.
All right, happy Monday morning. This Bloomberg Business Flash being brought to you by IBKR Financial Advisors. Switch to Interactive Brokers for lowest cost global trading and turnkey custody solutions. No ticket charges, no conflicts of your interest. Learn more at ibkr.com/RIA. Major averages right now mixed to, well, I'll say little change. Best performing individual stock in the S&P 500. Of course, that belongs to Warner Discovery. Those shares right now up 9.6%. Christine's going to break it down in just a few minutes. Investors waiting for some word on progress on the trade talks in London between the U.S. and China. And Sharon Bell at Goldman Sachs says the recent rebound in stocks may not be sustainable.
Having fallen, of course, very, very sharply around those Liberation Day announcement, you've recovered all of that now. The market's bounced in the US, in Europe, in China as well. So you've seen a very hefty rise in markets, and valuations are now quite expensive.
And among the most actively traded shares of Tesla, they are down right now 3.2%. Argus Research, as well as another research firm, both Argus and Baird, cutting the ratings of Tesla to the equivalent of hold ratings, cementing Tesla's reputation as the least loved mega cap stock among analysts. And of course, you mentioned it, Paul, Apple's annual developers conference kicking off today. No major releases expected, so investors may focus on Apple's struggles with artificial intelligence. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Hope you had a nice weekend.
Hi, guys. Yeah, I did. I did a puzzle.
That was your weekend.
Wow. Well,
You
I mean,
know
crazy
how
kids
to
in
live.
Brooklyn.
To be fair, one, I have a boot on my foot and, and a broken foot. And two, it was raining and
The weather was
love
terrible.
puzzles.
Yeah.
I love them. It was really fun.
I did get out, go to the beach both days, Saturday and Sunday.
I can see you got
as
color.
the clouds parted
Wow,
for me.
like
just
15
a couple
minutes.
of hours. No,
Okay.
a couple of hours.
All
It was
right.
nice.
Wow, look at that.
So-
Hey, guys, happy Monday. Both of
Yep.
you have sun tanning happening. All right, Market Drivers is brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with a 2-to-1 advisor to staff ratio. Small firm attentiveness, big advisor impact. Go to commonwealth.com to learn about their consultative support and technology. All right, let's get more here on some of the movers today. I'm Alex Steele with Paul Sweeney. We're joined by Bloomberg's Christine Aquino. Let's start with Warner Brothers and this split off.
That's right, Alex. It's a bit of a breakup story, as Paul Sweeney mentioned earlier. So Warner Brothers, ticker WBD, shares are up just over 9%. So appearing some of those opening gains on the back of this split news. So basically, the plan is to split its streaming and studios businesses and its TV networks operations by the middle of next year. So now the streaming and studios company will include Warner Brothers, Television, the Motion Picture Group, DC Studios, HBO and HBO Max, and then the Global Networks company will include entertainment, sports, and news television brands, including CNN. So this is meant to capitalize on consumers shifting away from traditional pay TV to new online options, and hopefully the new structure will cater to that.
So, Paul, do we like this?
Yeah, it's Comcast has announced something similar. So this is just the bankers taking taking apart what they put together just a few years ago and getting paid both times. Basically, it's a situation where you take the good businesses, the studio, the streamers, and you separate that from the less good businesses, which are the cable networks, which are flat to declining. But they have good cash flows.
And okay, so
and that's where a lot of the debt will reside.
So what do? You didn't just roll off the quote unquote less good business? Like
yeah, you just split them up.
It's just a cash cow, paying off debt. Period.
Yep, exactly. And maybe that business will merge with the Comcast cable networks that are going to get spun off, and then maybe so a bigger, badder company.
Two less bad combined make something different.
But the bankers get paid.
But the bankers
JP Morgan and Evercore.
It's important.
JP Morgan and Evercore.
It's important for Paul. All right, let's go to Qualcomm.
Qualcomm, that's another M&A-ish type of story. So ticker QCOM, that's currently up more than 3% at the moment. And so this is because Qualcomm reached an agreement to buy AlphaWave for more than $2 billion, $2.4 billion to be exact. And the offer equates to about 183 pence per share for AlphaWave. So that's a 96% premium to the share price on the 31st of March, which was the last trading day before they disclosed the talks. And so, the CEO of Qualcomm, Cristiano Amon, has been looking for ways to lessen the company's reliance on the smartphone market. And supposedly AlphaWave, given that its tech can be used for data centers and AI applications, can be used for that. But then some analysts from Loop Capital called the move a bit of a head scratcher, quote unquote. Although they did also say that it's a low risk deal for Qualcomm shareholders given the relative sizes.
All right, a little M&A trade, not bad. Starbucks, yeah, ticker SBUX. So that was down pre-market, actually, but recovering a little bit now, just up 0.4% at the moment. And so that comes after Starbucks announced price cuts for its tea-based beverages. Not here, though, in China. Paul, okay.
sorry.
All right.
But that's part of their latest campaign to appeal to Chinese consumers. The summer's coming up. They're also facing increasing competition from local chains that are more tea-based. So Starbucks now trying to compete with that market. A bit of a departure because before, they were arguing that they have a premium position in China, but I guess now they're wanting to compete with.
All right, my Starbucks now, Route 35, Wall Township, they do a great job every time I go in there. I went in there Saturday, they had 10 people working aggressively behind the counter. The line for the drive-through, that's where the business is now. There's like 4 or 5 people in the Starbucks, but the line in the cars was like 20 long. It's just, I don't know what's going on.
I don't understand that.
But it was a good experience, good coffee. They write your name on the cup again, so it's all good there. So
they just say Paul, and it's all good. All right, thanks a lot, Christine. Really appreciate it. Christina Aquino joining us from Bloomberg. For more conversations just like this, subscribe to our new Stock Movers reports. Listen for 5-minute audio reports and the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, and anywhere you listen. So the S&P closed around 6,000 on Friday. We are above barely that level now, but nonetheless, we're now officially in a bull market. So now our eyes turn to the trade talks in London between U.S. and China representatives, and if that's going to be enough to start moving the needle for the equity market higher. Joining us now is Brendan Murray. He is Bloomberg Global Trade Editor. What's a win for both sides?
A win for both sides is going back to the Geneva Agreement from a month ago and saying, here are the clear goalposts that we set for each other and that we're going to try to meet going forward. And then setting the stage for future rounds of talks, that they have enough in common and the tone in the room is good. Remember, these are two sides that sat together a month ago and came away and didn't really understand what they had agreed to. So here we are again. They just started the discussions a couple of hours ago here in London. It's expected to go well into the early evening, maybe even into Tuesday if they get hung up tonight. So the real goal here is to reestablish the framework for some talks. We're 2 months from the end of the 90-day reprieve that both sides agreed to when they brought their tariffs down. So time is ticking, and these are complicated talks, and they're not going to be done in just a few meetings. So the real goal here is momentum and maintaining the forward momentum.
I don't know. My strategy would be just walking down to the local pub, have a couple of pints, work this thing out. How tough can it be? Brendan, where are we on tariffs here? I can't keep track of where we are on tariffs. Could you just remind us kind of what the current status is?
Yeah, so part of that 90-day reprieve was to bring the very high tariffs down, 145% on Chinese imports into the U.S., extremely high tariffs for U.S. goods going to China. They brought those down. The U.S. is at about 30% on Chinese goods now. China brought theirs down to 10. So those are by no means low tariffs. Those are still having an effect. They're diminishing the share of trade that's moving between the two countries. So tariffs are going to be there for a while. Those aren't the kinds of things you start taking off this early in a negotiation. Those are leverage that you take off later on down the road once you can accomplish some of the other things that you accomplish. And for the moment, the U.S. is focused on seeing those rare earth elements, those key magnets and other things that are needed to make batteries and high-tech medical equipment start flowing back to the U.S. so American companies don't have to shut down their production lines. And China wants some of the export restrictions that the U.S. put on its high-tech exports to China, some of those lifted. It seems like the two sides came into these talks willing to give up some of those. So we'll have to wait and see where it goes from here. But we're expecting that they'll come away from these discussions with some sort of basis to continue the negotiations on a whole host of other things. Tariffs, like I said, not going to be addressed today. Those are further down the road.
Who is the leverage? This is my favorite question. In a minute, who's the leverage?
Well, you could argue that both sides have leverage. Look, President Trump has said he'll take tariffs back up and he'll cut off U.S. trade with China, as he did, initially. China would say, yeah, well, we'll just starve you of rare earth elements and see how well your auto industry survives a couple of months of that. So both sides have a fair amount of leverage. This is a game of pain thresholds. How much pain can your economy take? How much backlash can you take from the general public, from lawmakers? So we're at the very early stage of the leverage that's being applied. And you could argue that both sides have a fair amount of it. It's just who can withstand it the longest.
All right, very good. Brendan Murray, global trade editor for Bloomberg News, joining us from London, where those talks are taking place between the Chinese and the American trade delegations. And again, it just feels like if they're having dialogue, that's a good thing to me. I don't think anything, necessarily bad can happen. You got to keep talking and kind of pushing the ball down the road, I guess.
Well, that's my question, too, is like, what's going to be good news for the market? Do you just need no bad news?
I think that might be it.
Or do you start to need some trade deals where the ink is signed, not necessarily with China, but with somebody kind of lets go?
Yeah, I don't know. We'll see. Coming up, Ann Berry, founder and managing partner at Threadneedle, get her thoughts on these markets. Anurag Ran, a Bloomberg Intelligence tech analyst. I think some Apple developers are getting together out in Cupertino. We'll get some data on that.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg News with this Bloomberg Business Flash. And we are being brought to you by Oracle. Attention growing businesses, Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. This is for new U.S. customers with minimum financial commitment. See if your company qualifies at oracle.com/Bloomberg. Investors still waiting for some word on progress on the trade talks in London between the U.S. and China. Nothing yet, so we're mixed with the major averages. S&P 500 up 7, the Dow down 99, that's down about 0.2%. The NASDAQ 100 right now 72 points higher, that is up 0.3%. Little history lesson: the parent of CNN, HBO, and other channels, they were formed in 2022 when you had the merger of AT&T's Warner Media and Discovery. The deal did create a company weighed down with debt when cable TV was hemorrhaging viewers. Fast forward to this morning, Warner Discovery now splitting its streaming and studios business and its TV networks. It is the best performing stock in the S&P 500 right now, Warner, and it is up right now just below 10%. 2 more downgrades for Tesla, among the most active, down 0.2% right now. Bank executives have become more vocal about getting everybody back to the office. One problem, in a growing number of cases, they don't have enough desks. The death of the office rhetoric that was commonplace, you remember, during the pandemic, immediately thereafter, apparently was a little overdone, especially in cities like London, where, they don't have enough desk space for everybody back. So, anyway, you can always use my desk. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Alex and Paul.
So if there's not enough desks, does that mean that they don't have to work from home, or are they just like...
No, that means you share your desk.
Oh, okay. I see.
Hot desk.
Yeah.
So, it's like a hot swap desk kind of thing.
Yeah.
Okay, good. Well, I'm glad we worked that out. All right, JT.
All I want is a desk.
You're never there. What you don't, I mean...
I don't know. I just feel like I gave up. When I left Wall Street, I gave up the office. My kids are like, Dad, what happened? You used to have like a big office with a sofa and a big table. And now I got my little desk at Bloomberg. Can I at least keep that?
Again, he's never at his desk because he's here in the studio for 5 hours. All right, Alex Steele and Paul Sweeney. This is Bloomberg Intelligence Radio. We bring you all the top news in business, economics, and finance through a lens of our Bloomberg Intelligence folks. They cover 2,000 companies in 130 industries all around the world. So the S&P is trading at 6,008. Now what? Ann Berry is founding and managing partner at Threadneedle, joins us now. And the question I was asking before break is, do we need actual good news for a sustained move higher to all-time highs? Or is it less bad news going to be enough?
Unfortunately, it feels like less bad news is going to be enough, Alex. And I continue to be perplexed as to how the market level can be higher today than it was before we started down this Liberation Day tariff regime. So I think the market sentiment is such, like, don't shock us with something terrible and we're just going to keep on humming on up. That's how it feels at the moment.
Technology, Ann. Give us your thoughts on just the tech sector in general. Is that still a leading sector for this market overall?
So I think tech has been extremely highly valued for sort of 2 years at this point. But what's been really interesting to me about this earnings season is a lot of these businesses, those that have been giving out increased guidance, have been rewarded with increased investor support. And I think there are some areas of tech that continue to be interesting. A lot of these software companies that are becoming one-stop shop for enterprises, both large and small. So it does feel like there are certain pockets of opportunity, but I do think that the market's becoming slightly more disciplined around which are providing more guidance towards the upside and not hiding behind this, macro uncertainty narrative.
Well, to that point, does the macro uncertainty still touch these specific areas of tech?
Well, I'll sort of answer that, Alex, from two different perspectives. And one is from the actual client perspective, the customer perspective. And so when I think about the boardrooms that I'm sitting in, the conversation we're having is, whether we're manufacturing businesses or consumer businesses, we are concerned about the macro outlook, despite what I think is a euphoric equity market. And as a result, when it comes to hiring decisions, when it comes to CapEx, capital expenditure decisions, we're being more thoughtful and more conservative. But the one space that is still getting allocation of dollars is productivity enhancing software. And so places like Intuit that I look at, places like Salesforce that I look at, their share prices, CRM's been down, Intuit's been up, it's been rewarded for a great post-tax season. I do see spend continuing to go there, and it's about sort of sorting through to try and find the places where valuation looks reasonable.
And what's the state of play of AI? I mean, prior to all this tariff talk of 2025, all the market talked about, cared about, valued was AI. We've kind of stepped away from that a little bit. What's your view today about AI and maybe how investors should have exposure to it?
I'm not sure that we have stepped away from AI, but I think instead of it being this sort of novelty that's grabbed headlines, it's something that instead is woven into all the depths of the earnings narrative. So if you look back at the earnings call transcripts, the vast majority of businesses were talking about the ways in which they were currently or planning to incorporate AI into their own product development, into enhancing efficiency, into using it for marketing and for sales and to reaching out consumers. So I think it's actually now become something that's become table stakes. We've moved past AI as a headline grabber into, if it's a headline, it may be for the downside because it's a surprise to the market. So I think it's now here, and I think it's a place where we're looking more watchfully to see evidence of return on investment. And we're starting to see it. We're starting to see some businesses come out and talk about specific ways it added to the top line and to the bottom line. I think those who aren't coming out saying that are going to suffer in the second half of this year.
So the question, what do you like?
Well, there's a couple. Let's start with the US. On that theme, I do like Intuit. It was sort of a surprising one to me because I'd had in the back of my mind this bias when you looked at what had happened to H&R Block over time, that when it came to the core tax product, they do TurboTax. That was set for complete AI disruption. It was going to be fully automated, and the IRS had been talked about for 2 years now, issuing their own software. And I thought that's going to be really difficult for folks like TurboTax. They knocked it out of the park. They're on the path for 47% growth this year. And what they figured out is that, yes, the consumer, yes, the small business wants to have AI to improve the efficacy of their tax filing, get their refunds faster, but they also want human beings they pick up the phone and talk to. People are now, I think, sufficiently spooked by the pace of change and the complexity of change in the tax system that they're wanting a human being to talk to and to walk them through what it is they should be doing instead of filing themselves or relying on just technology. So to me, that marriage of human and artificial intelligence is one of the reasons I like Intuit, and there are others like it.
And thanks so much for joining us. Really appreciate it. Ann Berry, founder, managing partner, Threadneedle from New York City. The only problem I have with Intuit is, how do you pronounce it? Is it Intuit or Intuit?
I say Intuit.
Intuit, yeah.
But my pronunciation, as we know, is not the best in the...
Tomato, I don't know, but a pretty cool company. TurboTax, yeah. My daughter uses TurboTax. She's taught her knucklehead brothers how to use TurboTax too.
Yeah, I mean, I used to use TurboTax, and then I got complicated, and then I stopped using TurboTax.
Yeah, I think that, but anyway, it's pretty cool. All right, let's talk about a little technology. Apple, they're having a conference out there on the West Coast where they get the developers together, and this is where some of the cool stuff comes out when these app developers figure out what they want to do on the Apple platform. Anurag Rana joins us, Bloomberg Intelligence. Anurag, what are the expectations going into Apple's developer conference here this week?
Yeah, the expectations are very low. I mean, we're not expecting a whole lot coming out of WWDC this year, largely because Mark Gurman has done such a good job of telling us what is going to most likely come out of it. Not a whole lot of new AI features. Apparently, the one thing that is up there is to open the platform up for third-party developers to create new AI applications, which in the long run could help them immensely. But again, over the next few months, apparently there isn't much coming out as it relates to Apple doing more on AI. Whether they decide to beg, borrow, or steal from somebody else, we'll find out how that partnerships are scaling up.
So what's going to be the flashpoint then for WWDC? Like, what's going to be the highlight if we're not going to hear that much about AI?
I think, again, this is not rumored. We don't know what it is. But, last year they came out and said they're going to do a partnership with OpenAI. So when you're asking, the ecosystem a question about something, and, you can go outside and have OpenAI's help or ChatGPT's help to get that answer. So that's good. But at the same time, they had left space open for other large language models, not just ChatGPT so Is it possible that they can do a tie-up with Google Gemini? We don't know. I mean, I think in the long run it should happen, but I do not know if this is the right time or they have to wait till the judge's, decision sometime in August. But I think down the road, Gemini could be a very good feature. We just saw Google's I/O event, and Gemini has really come up quite a bit in the last 2 to 3 years. I think all the tech companies were caught unaware when ChatGPT came out, and all of them are running to basically catch up and try to showcase their own features. So that could be one surprise. But again, we have not heard any rumor that that's going to happen.
Red headline crossing the Bloomberg terminal right now. Barclays cuts more than 200 investment bank jobs to pare costs. And we'll have further reporting on that coming up. So, Anurag, you mentioned kind of the various legal issues facing the company here. I'm looking at the stock. It's down 18% year to date, underperforming the market pretty dramatically. Is there just a cap on this stock until we get some clarity on some of the, I guess, liability Apple may face?
Yeah, I think, you could say that, it's trading at 28 times earnings, where you don't have anything, really positive coming out right now. You have the big overhang of the fee that they get from Google. Then there is this pressure on the App Store because of all the changes that's happening. The China story is not looking good in terms of the local demand in China. The President Trump is not giving them a break when it comes to building phones. So to be honest, there's nothing really going well for them. And yet the stock's still at 28, 29 times earnings. Right. And I think that just tells you how people, really understand the long-term value of the ecosystem and the company. But there isn't much really to be happy about in terms of, the growth prospects or the profit prospects of it.
Do you think that 28 times earnings is a solid way to value the company?
I think it's a very tough way to look at it because, I can take the argument on one side that it still has a really long way to go in terms of gaining market share for the rest of the world when it comes to emerging markets, when it even comes to the US, because young people are still really into the Apple ecosystem, and down the road that market share should go up. But on the other hand, the big overhang for at least, in this case is the roughly 20-odd billion they get from Google for the default search. If that goes away, that's a lot of that falls into the bottom line. So the 110 billion or so you have in free cash flow, maybe that cuts down by like 15% or so. So that's a very big number, frankly, in our view. Once that overhang goes through, then I could, make some more positive or constructive, views on what could happen to Apple over the 3-year period or so.
Anurag, thanks so much for joining us. Really appreciate it. Anurag Rana, technology analyst, Bloomberg Intelligence, joining us via Zoom from that technology hub known as Chicago, Illinois. That's where we planted our flag there for Bloomberg Intelligence for technology. Chicago.
No, huge.
Exactly. Now we got folks out in San Francisco as well here. But again, when was the last time when we were like just yawning through an Apple developer conference?
I know
it. Odd.
I know it. And I think we're still kind of waiting for, are we going to get a super cycle? And I've been hearing that since 2016, and we have yet to have that. And then when you don't have the AI product to then justify a super cycle with high-paid iPhones, then you got yourself a little bit of an issue.
Yeah, I decided not to wait for the super cycle, so I just upgraded to the whatever I got. 16.
Well, because your phone was like an iPhone 11.
Yes.
So exactly. I don't even know how that was actually still working. All right, coming up, before we go to Paul's Wheelhouse, talk about the Warner Brothers Discovery plans to split into 2 public businesses with Geetha Ranganathan, one of the best out of Bloomberg Intelligence. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom, with this Bloomberg Business Flash. Still waiting for any hint of progress in trade talks between China and the U.S. Those talks are taking place in London. Investors also focused on data this week. That's going to include a look at inflation with the Consumer Price Index and the Producer Price Index midweek. Meantime, Drew Mattis at MetLife says of all the data this week, he's actually focused on the inflation expectations that come out at 11 this morning.
The New York Fed's survey on consumer expectations comes out today, and we'll get a huge bevy of information on not just what consumers are expecting inflation to do going forward, but how inflation is impacting their lives.
And we'll bring that to you live, of course. For the 11 major industry groups in the S&P 500, higher technology in the lead right now. Warner Brothers Discovery, best single performing stock in the index. That was up 7.5%. Barclays preparing to cut over 200 jobs in the investment bank division in the coming days. Part of the CEO CS Vennekin Krishman's plan to boost the profitability of that division. The cut's going to impact staffers in investment banking, global markets, research, managing directors being the most senior roles affected, representing about 3% of the investment bank's headcount. S&P 500 up 7 right now, 6,007, about 2% away from the all-time high. Dow Jones Industrial Average down 166 points. The NASDAQ 100 right now 86 points higher. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Alex and Paul.
All right, thanks so much, JT. Alex Steele here alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We bring you all the top news in business, economics, and finance through our lens of our Bloomberg Intelligence folks. They cover 2,000 companies and 130 industries all around the world. The split up that's not a surprise at all for anyone on Wall Street is Warner Brothers Discovery splitting into 2 publicly traded companies, one with HBO Max film and TV business, the other with its cable business. The stock is up over 7%. And for more, Geetha Ranganathan, Bloomberg Intelligence analyst on U.S. media, is with us. Geetha, do we like this plan? What in it was it all surprising?
We like the plan, Alex. This has been many months in the making. So last December, they had actually reorganized the existing business into these 2 separate units, the TV business and then the streaming and the studio business, kind of eventually paving the way for exactly the announcement today. I think the surprising part, and this is a little bit of a pleasant surprise for Warner Brothers Discovery, has really been on the debt side. So as you well know, the linear TV business is challenged, but the bigger problem for WBD has really been a huge amount of debt. And this debt was really as part of the combination of Warner Brothers and Discovery, which happened a few years ago. At that point, the company had over $55 billion in debt. They've paid about $19 billion down, but they still have $35 billion. But what they're doing now as part of this transaction is they have a tender offer out there. They're really kind of looking to streamline the capital structure. So when you have these 2 new public companies, there's going to be a much more manageable debt load at both of those companies. And I think investors are really reacting positively to that news.
Geetha, when they put the companies together, one of the arguments was to create scale to compete against Netflix and Disney. What happened to that argument?
Yeah, exactly, Paul. Yes, they did create scale as far as the TV networks part of the business was concerned. You have Discovery, which is really the leader when it comes to nonfiction. You have, the Warner networks and HBO, which is the leader when it comes to fiction and quality dramas and scripted series. And they thought that would do well, but unfortunately, what happened is, and all media companies, as you well know, Paul, have this conundrum because they have the TV business, which brings in a lot of the cash, but is literally a no growth business. In fact, it is in decline. Both advertising as well as affiliate fees are in decline. But then you had the streaming business, which initially kind of had a little bit of trouble because, in that whole game of subscribers and that land grab for subscribers, they actually ended up incurring a huge amount of losses. But there is this whole wave of content cost rationalization. We've seen a turnaround in all of the streaming businesses, and Warner Brothers Discovery actually has kind of led the charge there. So they were actually the first to get profitable in terms of streaming. And so now we're seeing this huge disconnect, or at least they are saying that there is this huge disconnect between the TV networks business and the streaming, the studios business, which should arguably get a much higher multiple. And that's kind of the reason for this split. So we're seeing now multiple companies do this actually. So Comcast, which has the NBC division, they're splitting off their cable networks. We had Lionsgate and Starz, where you have Lionsgate as a independent movie studio, Starz as the media networks, and now you have Warner Brothers Discovery. So there's this whole big movement now towards, this vertical kind of separation, if you will.
I mean, do they all come together then and create kind of one less great TV network thing?
Yeah, that's kind of the plan. So the most logical combination, and this has been floated around for months now, is that with this news of the Comcast, the NBC cable network separation, would that become like this kind of roll-up vehicle? And that's kind of what a lot of the industry experts are thinking. They're expecting, now that you have this news today with Warner Brothers Discovery, everybody's kind of expecting down the road some combination of maybe that Warner Brothers Discovery TV assets along with the Comcast assets, and who knows who else kind of spins off their networks, and then that becomes this giant kind of TV network umbrella. Going back to Paul's point about scale, because scale really matters now in this business.
All right, how about Paramount, your other sick child in your coverage? What's going on there?
Yeah, so we really don't know what's going on there. So there's been a lot of ups and downs, Paul, with the whole closing of the deal. So the Paramount Skydance transaction, it was announced last year, sometime in July. It was supposed to close by the end of the first half of 2025. But there's just been so many different press reports. They've had to do different things to appease the current administration, to appease President Trump. I'm not sure he is yielding so easily. So it's still kind of 50-50, Paul, whether that transaction actually closes. So there's just too many things up in the air. And then again, there is the lingering question, because we know that Skydance was really only interested in the Paramount studio business. So again, what they kind of do with the TV networks business, what they do with the streaming business, that's all a huge question mark. So visibility very, very limited right now for Paramount.
I guess I just wonder, if you stick all the cable networks together, how does that actually generate real income? I mean, I know that's a cash cow to some extent, right? But then you have a lot of debt and there's no growth. So, what kind of asset is that?
Yeah, it's definitely a melting ice cube kind of an asset, which is exactly what, the TV networks have been. The argument that all of these media companies are making, Alex, is that somehow by kind of banding together, because each one of them will have one or two networks that is kind of a must-have network. So if you're looking at Warner, you have CNN. If you're looking at if you're looking at the NBC networks, you have USA, you have MSNBC. So there are definitely always going to be some must-have networks in each portfolio, and kind of putting them all together will stem that rate of decline, or at least that is the argument that they're making. But again, we've seen that cord cutting has actually been far worse than what it was initially projected. So again, it remains to be seen. But the idea is they want to milk it till it kind of runs dry.
Ethan, do we have any early feedback from Orlando with the new Universal Park? John Tucker's asking.
It's supposed to be awesome, I think, right?
It is awesome. And we, the initial, so this actually only opened about 10 to 15 days ago, Paul. And so far, everything seems to be going in the right direction for Epic Universe and for Comcast. And we know that they are really kind of doubling down on their parks business. They actually have a new park coming out just out of London, and they have all these other attractions that are opening in the US as well. But so far from Orlando, the signs are pretty strong.
So my daughter's 10.
Okay.
She's never once asked to go to Disney, and she has asked to go to this thing.
Really?
Yes.
See, it's interesting, isn't it?
Yeah.
But now you're gonna go to Orlando. You go to the Universal thing, and you say, since we're here, let's do a couple of days at Disney World, and that's kind of the plan there.
Right.
So,
No, we're not doing either of those things.
Okay.
I'm just saying more just on like the buzz for the actual kids who are going to make their parents do that. Go figure. All right, Geetha, always good to catch up. Geetha Ranganathan, Bloomberg Intelligence Analyst on U.S. media. So it reminds me of like an oil asset where like if you have an asset that's pumping oil but you don't want to invest, you just literally let it run dry.
Yep.
Like is that what these...
That's what I think these things, and they turn out to be good bonds to own because there's lots of cash flow.
Oh, interesting. Okay.
But they're not necessarily good equity because there's not a lot of growth stories. So that's how that works. People will buy these bonds hand over fist.
Okay.
But not so much the equity.
I always learn the things. It's very nice. All right, coming up, we're going to learn some stuff with Sam Fazeli, Bloomberg Intelligence Director of Research for Global Industries and Senior Pharmaceuticals Analyst with the latest biotech news. Happy Monday, guys. This is Bloomberg.
Listening to Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, Alex Steele, Paul Sweeney live here in our Bloomberg Interactive Broker Studio along with John Tucker. We're streaming live on YouTube. Check us out there, Bloomberg Live Podcast. We're also on your smart TV, Roku, all that kind of stuff. Search for Bloomberg Originals, and that's where you'll find us. Let's talk a little healthcare here like we like to do every week. But Sam Fazeli, Director of Research for Global Industries and Senior Pharma Analyst. He's actually at his desk in London. He's usually traveling all over the place, going to these crazy conferences, learning about the science. I want to talk about the money, Sam. More and more biotechs are returning cash to shareholders. Why are they doing this?
Yeah, hi, Paul. Thanks for having me back on. So I think companies are coming to a realization that they can't just sit on a large pile of cash. The latest one that just happened was $700 million in the bank, and the assets weren't particularly going in the direction that I think shareholders were happy with, which is why the company was sitting at a negative enterprise value of like 100 million or 90 million, depending on when you're looking at it. And I think they thought, well, no, actually 288 million, sorry. They thought it's time to return some of that cash to shareholders, and you're seeing more of this happening. Investors got tired of companies essentially constantly saying, we'll find better things to do with your cash. And the investors go, we know what to do with our cash.
That is like a really weird thing for a biotech company, right? Because isn't the whole value proposition eventually is that you spend all this money on R&D to make that super cool thing that's going to make $1 billion?
Right, sure, Alex. But if you start off saying, I am the expert in this area, and I'm going to take this expertise and translate this idea into a product, and that doesn't work out, then you say, actually, I have another idea that wasn't necessarily your expertise. That's where investors get a little bit edgy. Yeah.
So, Sam, I know the FDA recently approved Moderna's new COVID vaccine. What's new about it, and is it better?
Well, actually, they did a real trial of comparing this new version, I'll tell you what's new about it, with the standard vaccine, Spikevax, that we've been getting. I don't even know how to pronounce the new name. Mnexvia, something like that.
Sure.
I could never, it's not an easy rolling off the tongue. What they've done is that they've taken the dose from 50 micrograms to 10 micrograms. And what that does is that it gives you less reactions. And in fact, in this particular trial, they showed even higher antibody responses compared to the old one. So there is a small possibility. It was only a few 10% or so higher. A small possibility you get a much better efficacy in a real world setting, but it seemed to go in that direction here. So, and that now is going to become the base of all their vaccines going forward.
Right, but that's a good news if you take the vaccine, but then you're not allowed to get the vaccine unless you have underlying comorbidities, right?
Yeah, Alex, it's only you who's not allowed to get the vaccine.
I know, like the one person who COVID loves the most.
You don't have a whole bunch of the qualifying factors. You're not old. You're over 64.
No.
You're not a comorbidity, except the one thing you have, which is something that doesn't show up in these conversations, is a risk of a really bad reaction to COVID, right?
Yes.
Which is something that you've experienced. So what is going on, though, is that the company has, Moderna specifically, has committed to the FDA to do a placebo-controlled trial in a 50 to 64-year or 65-year group of individuals without comorbidities compared to a placebo, i.e. nothing. So that will be where they will have to do this trial. And by committing to it, this trial needs to be large in order to show a difference. And remember, a whole bunch of people are going into these trials now with previous immunity, which means the difference is going to be smaller, which means you're going to need larger trials. So I hope it works out, and I hope the cost isn't punitive for Moderna.
New obesity data from a newish biotech, Metsera, and their obesity issue. What's going on there? What do they have for the market?
Yeah, so they've got a new mechanism, which they're not the only people following it. Lilly's doing it, Novo's doing it, Zealand, and now in partnership with Roche are doing it. And it's targeting not GLP-1s, but amylin in the same sort of pathway of hormones that regulate hunger and satiety, etc., but slightly different. And the theory is that you're going to get a drug that is less difficult to tolerate, i.e. nausea and vomiting is the biggest one with these drugs because they impact the gut. And so here they've presented data that shows pretty good weight loss at a 36-week readout, 36-day readout, 5 weeks. And you've got, unfortunately, 100% nausea rates, but they are at the very low grade, i.e. just feeling a little, I'm assuming, yuck. And then what you've got is that it only seems to, majority of them seem to pass after the first week. So I think this is good.
That's why I love Sam. He's like, they just feel a little yuck. Like, this is why Sam knows everything so well, he can use words like that.
Exactly.
All right, Sam, you're the best. Thanks a lot. Sam Vazzelli, Bloomberg Intelligence, Director of Research for Global Industries, as well as Senior Pharmaceutical Analyst joining us there. All right, guys, for our listeners in the U.S., here's a reminder for you. You can listen to us via satellite radio on Sirius XM, channel 121. Access the world's only global audio business network coast to coast 24 hours a day. Bloomberg Radio on Sirius XM, channel 121 is presented by Oracle. Stay tuned for the latest market news and industry research. Our next hour of Bloomberg Intelligence starts right now, and you have a market with pretty small moves. If you're looking at the dollar, stocks, or bonds, investors looking at those trade talks between the U.S. and China for signs of whether tensions will be diffused, those talks unfurling over in London, and the S&P is just about 2% away from its record high as we are now officially in a bull market for the equity index. And again, Treasury's not doing that much. You got a 30-year bond auction coming out on Thursday everyone's looking at. You got the 10 on Wednesday. You get a 3-year tomorrow, just what that takedown will be. Yeah, you know.
All over the auctions.
Yeah. Paul's like, oh man, Treasury auctions? All right. This is Bloomberg Intelligence.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been in U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
One person's chaos is another person's animal spirits.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
Are people just too exuberant out there?
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Happy Monday, everybody. Alex Steele here alongside Paul Sweeney and John Tucker. This is Bloomberg Intelligence. We have a great hour lined up for you. We'll tackle everything that's coming out of D.C. with Nathan Dean, Bloomberg Intelligence Senior Policy Analyst. Plus, we just got some inflation expectation data. We'll break that down with Michael McKee in just a moment. Mandeep Singh, also Bloomberg Intelligence Senior Tech Industry Analyst, will be joining us to cover all the tech news of the day. And then Adam Coons is Chief Portfolio Manager at Winthrop Capital Management for the latest on the markets. And we'll talk about Mr. Cuomo and part of your interview, Paul, and Tom Keene with Andrew Cuomo.
Yep, absolutely. We had him here for about almost a half an hour. So we talked about a wide range of topics locally for New York City and nationally for the Democratic Party.
Looking forward to listening to some of that interview as well. But let's kick it all off for you right now with the Bloomberg Business Flash. And for that, we go to John Tucker.
Okay, since we are data dependent, let's start there. The New York Fed, the one-year inflation expectations, that's actually coming in better than expected. 3.2%. The prior month with 3.6%. And economists surveyed by Bloomberg, they were looking for 3.5%. So that's kind of giving stocks a lift right now, as well as bonds. S&P 500, 5 points higher. That's up 0.1%. We're at 6,005. The Dow Jones Industrial Average, pairing some of the earlier losses, right now down 89 points. The NASDAQ 100, 56 points higher. That is up 0.25%. The two-year yield, which is more policy reactive, that is down 2 basis points. We're at 4.01%. Investors also waiting for any word of progress in the U.S.-China trade talks taking place in London. And meantime, Robert Teeter at Silvercrest Asset Management, he remains relatively optimistic about company earnings.
So I think we're headed to pretty decent gains, high single digits. It's going to be all over the place, though. Very noisy quarter, in my opinion. A lot of bifurcation. Some companies are, kind of giving you that sense that they're hunkering down a little bit. Others are giving you the sense they're leaning into this, and I think leaning into it is the way to go.
Warner Brothers Discovery, best performing stock right now in the S&P 500. Tesla shares among the most active, also lower. It was hit with a pair of downgrades. Circle Internet Group's shares, they continue to climb. The third day of trading, gaining as much as 8% right now. This would be a 285% rise above the stablecoin issuer's IPO price. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Alex and Paul.
All right, John Tucker, thank you so much. We appreciate that. A red headline crossing the Bloomberg terminal. The New York Fed says one-year inflation expectations fall to 3.2% from 3.63%. Last period, the consensus was 3.5%, so a little bit better there. All right, let's take a look at some of the stocks on the move today. I'm Paul Sweeney along with Alex Steele, and we're joined by Bloomberg's Christina Aquino. Christine, what are you looking at today?
Looking at Aon at the moment, Paul. So that's ticker AON, and that stock is down more than 4% at the moment. We are going to get an investor day from that company this week, and the company said that management will reaffirm the firm's 2025 guidance across all its key financial metrics. Now, reminder, its first quarter earnings did actually miss consensus on most of those key metrics, including adjusted operating margin. Its consensus also showing that its margin improved improving about 70 basis points for this year, and guidance implying roughly 80 basis points. Full year organic growth expected at about 5%, but that is a slowdown from the prior 3 years. So not a good day for insurance brokers here.
Not so much. All right, how about Intuitive Surgical?
Intuitive Surgical, ticker ISRG, that's also falling today, Alex, down more than 6% at the moment. It's a robotic surgery company, and it just received a cut from Deutsche Bank from hold to sell now. And Deutsche Bank citing, quote, significant risks to its instruments and accessories business. Its analysts saying that encroachment to the company's I&A segment by remanufactured instruments is inevitable. And Deutsche Bank also saying that about 46% of Intuitive's revenues in that segment will be at risk of encroachment by third-party remanufactured devices.
Okay.
Synchrony. What is
Synchrony Financial?
What does Synchrony
that's
Financial
right.
do?
It's a fintech company. It's
okay.
up,
Gotcha.
ticker SYF, and shares are up more than 2% because there is a report now that Walmart credit cards will once again be issued by Synchrony. So it's a Walmart tie-up. OnePay is a fintech company backed by Walmart, and they've picked Synchrony to issue a co-branded card that can be used outside of Walmart, as well as a private label card that will be just for purchases at the retailer. And so OnePay will begin offering these cards later this year. Synchrony actually used to issue to Walmart credit cards up until 2018 for nearly 2 decades, and then they switched to Capital One. So I guess they're just switching back.
Okay.
Wasn't Synchrony rolled out of GE after the crisis, that it was part of GE? It was their Bank Capital.
Ooh, that's way back.
Bank Capital arm.
That's way back.
Anywho,
That's a good one.
All right. All right. Thanks so much. Really appreciate it, Christine. Bloomberg's Christine Aquino. For more conversations just like this, subscribe to new Stock Movers reports. Listen for 5-minute audio reports and the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere else you listen. So there is a lot of drama unfolding in London between U.S. and China trade representatives as they continue their conversation. But in D.C., there's still stuff going on as well. Nathan Dean, Bloomberg Intelligence Senior Policy Analyst, joins us now. Nathan, obviously the headline over the weekend is the riots in L.A. and then the National Guard being sent in without the governor having asked for it. How is that unfurling in D.C. right now?
So I would say, it was one of those things where President Trump wanted this fight because it plays to one of his key messages that won him the election, and that was on immigration. But, in terms of how it plays in terms of things like the One Big Beautiful Bill or to tariffs or to the, that's really not happening just yet. There was a lot of discussions about Medicaid cuts and SNAP reductions and Inflation Reduction Acts, and those messages are very difficult for Republicans, but they're still moving forward. So when it comes to Los Angeles and this idea of troops, I think President Trump certainly wants that to try and deflect some of that messages away from Medicaid cuts, for example. The question is, we anticipate the One Big Beautiful Bill going into July. Will California go into July? Time will only tell.
So where are we on either, cuts to expenses like Medicaid or new revenue like taxes? Where are we in that discussion these days?
Yeah, so, there's really 3 things that came out of the House bill. It's the Medicaid, it's the SNAP benefits, and it's the Inflation Reduction Act. Now, each one of those was given a certain time frame of when those tax credits, and in the Medicaid cuts, an example of when they would actually take into effect. Now, the House conservatives insisted for Medicaid, for example, that it would start in December 2026, the Inflation Reduction Act 2028, all this being said. Now, what the Senate is doing at the moment is they're looking how to moderate it. And so Senator John Thune gave a statement just last week saying that we're going to anticipate a lot of that pushing back. So what we're telling our clients is that go back to the original House and Ways and Means text, where for a lot of these tax cuts and a lot of these tax extensions, they would start taking place in like 2028 or 2029 beyond Trump's rest of his administration. That's where we think the Senate goes. Now, when it comes to Medicaid in particular, obviously it's a very difficult vote for a lot of Republicans that have either constituencies or states that are heavily development or heavily reliant on Medicaid. We think that most likely that those ultimate decisions, if you will, are going to be votes to kick the can and push those cuts off so that if a future president wants to come back and revisit it, that person would have flexibility.
Right. Interesting. In terms of the feud between Elon Musk and President Trump, I guess it's a twofer. Like, one, where are we with that? But then more importantly, kind of what is Doge doing within the government without Elon Musk?
So it seems like we're sort of at a truce at the moment. Now, I say that, obviously, it could change almost instantly. But in terms of where we are with that, well, the White House sent what is known as a rescissions package, trying to codify around $9 billion in cuts. Now, this is mostly USAID, state, and NPR. We looked at it from an investment point of view, and we actually don't think there's much there market moving. But the reason why it's important to talk about is that this is the first of many rescissions packages that will come probably throughout the rest of this year. Now, the White House can essentially say, look, Doge has identified these $1 billion number of cuts. Now we need Congress to go in there and actually approve this. Now, you don't need a filibuster. It's just a majority vote in the House, a majority vote in the Senate. But obviously, there are differences between what Doge wants to do and what senators want to do. This happened one time in 2018, and the Republicans just said, look, I can't vote to cut these things that are ultimately going to impact my district. So we are going to continue to see things like clean energy, tax credits, loans, grants, and so forth like that. Those rescissions packages are most likely coming later this year.
Last week, Alex and I were broadcasting remotely from Washington, D.C. area. And one afternoon, I was walking around town, walking past the Department of Agriculture, which is a massive building taking up like a whole square block. And it was quitting time, and people were coming out by the thousands. I mean, I don't, it goes back to, we don't know what these people do, and I'm sure they're doing good work. But now that Elon Musk is out of the picture, is Doge still a thing? Are people just going to come back into the federal workforce now?
Well, anecdotally, I would say, yes, Doge is still a thing. Just talking to my friends and family around the region, they certainly are still active. And there are Doge employees at pretty much all of these agencies. And what I would say is that rather than being the bully pulpit of Elon Musk, now each agency leader is the one that actually has to make that decision. For example, over at the Federal Reserve, Doge isn't there yet, or as much as I can tell, they're not there yet. But Fed Vice Chair for Supervision, if you look at Michelle Bowman of her speech for last week, it had a lot of Doge elements to it in terms of saying, look, we need to get cut, we need to actually become more streamlined and so forth like that. So the idea of Doge is certainly going through the agencies, but the bully pulpit of Elon Musk isn't there, so you will see cuts and you will see streamlining efforts continuing throughout the rest of this year.
All right, Nathan, thanks a lot. Super appreciate Nathan Dean, Bloomberg Intelligence Senior Policy Analyst, joining us from Washington, D.C. All right, the economic data that we got just at the top of the hour had to do with Fed inflation expectations. For the short run, that 1 year falling to 3.2% versus 3.63%. So, like, we're getting there. And 3 to 5 year also lower than estimated. Michael McKee, Bloomberg International Economics and Policy Correspondent, joins us now. Okay, so are we celebrating this or what?
No, I mean, it's a survey, but...
Hey, 3% is close to a two-handle, I'm just saying.
Well, yeah, but the problem is it's still 3.2%. But it is good news for the Fed because it does suggest that people are not... We're not getting unanchored in our inflation expectations. And the explanation is probably that what we've seen is Trump taco. He's backed off on his tariffs. He's put on things on pause. And so people aren't quite as concerned as they were when we were going to have massive tariffs. We still don't know what the tariffs are going to be. So this doesn't settle anything, but it does suggest that people are still think that the Fed can control inflation even if it jumps higher.
So we are on Wednesday and Thursday going to get some inflation data. Wednesday, the CPI. Thursday, the PPI. I don't see anything else really jumping out at me. When are we going to start seeing inflation data, if at all?
Well, on Wednesday and Thursday. I mean, both of those indicators are expected to rise on a year-over-year basis. The CPI going from 2.3% to 2.5%, and the core to 2.9% from 2.8%. So we're seeing it, that's going to be the first rise that we've had in a long time. And so that will get people's attention. Now, this is already forecast. So does it have a big market effect on Wednesday? That's hard to say. You know more about how traders think than I do. But it will be the first real evidence that there is some sort of tariff effect. And then PPI will be even more so because much of what we import is and tariff is intermediate goods.
But then that gets so confusing because then you have any sort of preemptive buying before that and stockpiling and inventory build, which will distort PPI also. So, I mean, again, getting that clean read is going to take a while.
Well, it's going to take a while, and we still don't know what the patterns of buying are going to be. We did have the big pull forward of imports in January, February, to a certain extent March, and then in April we saw a big reversal of that. These are going to be May CPI, PPI figures, so they should give us a more clean read than we've gotten to this point. But then what happens when we get tariffs numbers? Do they lead people to once again start importing stuff? Do they lead them to cut back on importing stuff or change what they import? So it's impossible to really make a conclusion out of anything at this point, which is why we send Anne-Marie Corderin over to London, hang out with Scott Bessent and try to get an answer.
I mean, I guess that's going to be potentially important, I guess, what we hear out of London here. I'm just not sure if we're going to get any news, but I guess the market's discounting some base level of tariffs, it seems like. I mean,
well, it seems that they have priced in maybe the 10%. Now, have they priced it in effectively? There's, it's funny, the people who are on the trading desks are making all these trades, and we're seeing the markets go up, and then the analysts who are sitting back going, these guys are nuts. So do we? It's kind of hard to say where we're going to end up with this, and whether or not there's a oh geez moment at some point when the markets say we really didn't think that it was going to be this bad.
Or have we already seen that? And is it just more like less bad news is actually going to be more supportive for the market? And then if you get any kind of actual trade deal with some other country than the UK, does that wind up being good for the market?
Well, and remember, the UK is not a trade deal. It's a deal to talk about getting to a deal. So
and also, we don't have a deficit with them, so there's that.
Where do we all, where do we end up with this? That's the really impossible thing. So that's why next week the Fed meets, not going to do anything. They'll put out a new dot plot, won't mean anything.
It won't mean anything because there's still too much uncertainty about what trade policy will be.
The pause on tariffs, the reciprocal tariffs, ends on July 8th. So July 9th, the president could come out with a totally revamped high tariff program if he doesn't get any more deals. And then anything the Fed said next week wouldn't make a whole lot of difference.
Which is why I feel like we need to bring back fan charts.
We have fan charts.
Yeah, but they don't really talk about that. They have the dots. Like, I feel like this is the perfect opportunity instead of the dots.
Well, there has been a lot. There was a lot of talk about the Fed should do like the Bank of England and do fan charts.
Exactly.
So what's a fan chart?
A couple of years ago, it's
like different scenarios.
So it opens up like a fan.
Right. It shows you the Fed's path is the median, and then it shows you the upper and lower bounds of their forecasts. And a couple of years ago, they started providing them, and nobody looks at them.
So do that on next Wednesday.
Well, that'd be kind of hard to.
Yeah, see, he doesn't want to do it. That's what I'm saying.
Well, for me to stand on TV and go like this.
As a fan, yeah, all right, fair enough. But to the point, there's just
you can look it up yourself.
Oh, no, you can just tell me the next day. All right, Mike, thanks a lot. Michael Mickey, Bloomberg International Economics and Policy Correspondent, joining us there. Right, because if you have a wide array of options, wide array of economic assumptions as well at the end of the day.
That makes sense to me.
All right, well,
nobody knows what's going on.
No, coming up, Adam Coons has put money to work in this market. Chief Portfolio Manager at Winthrop Capital Management will get his latest on the markets and what would make him more bullish or more bearish, or where's the value no matter what. Plus, we'll play back for you some of the interview with Andrew Cuomo, New York City mayoral candidate and former New York governor, after speaking with Paul Sweeney and Tom Keene earlier. Wide-ranging interview, and we'll break some of that down for you. In a market where equities are not really moving anywhere that much, volume is a little bit mixed, and you have the S&P pretty much flat on the day. The Nasdaq up by 0.3%. This is Bloomberg Intelligence. Happy Monday.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Stocks drifting as the two biggest economies, the U.S. and China, continue talks on trade. Those talks taking place in London. As soon as, if we get any word, of course, we're going to bring that to you. One of the sharpest moves in the market coming from Warner Brothers Discovery, up right now 7.7%. Best performer in the S&P 500 right now. I'm just saying it would split into two companies. One will get Warner Brothers TV, HBO Max, and other studio brands. The other is going to hold on to CNN, TNT Sports, and other entertainment, sports, and news and TV brands around the world. Consumer expectations for future inflation, you heard Mike McKee talking about it, improved across all fronts in the month of May. Household pessimism about the labor market somewhat eased. These are the findings of the latest New York Fed survey just released. Right now, the S&P 500, it is unchanged, right at 6,000. The Dow Jones Industrial Average, 102 points lower. And the NASDAQ 100 right now, 36 points higher. That is up 0.2%. This flash brought to you by Oracle. Attention growing businesses. Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. This is for new U.S. customers with minimum financial commitment. See if your company qualifies at oracle.com/Bloomberg. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Paul and Alex.
All right, thanks so much, JT. Appreciate it. Alex Steele, Paul Sweeney. This is Bloomberg Intelligence Radio. We are broadcasting to you live from our interactive broker studio right here in Midtown Manhattan. You can also check us out on YouTube, as well as any smart device that you have. Check us out on Bloomberg Originals on your smart TV, etc. All right, well, let's look at the market right at 6,000, right? We're officially in a bull market, but then kind of now what? What's the next catalyst? Adam Coons, Chief Portfolio Manager at Winthrop Capital Management, joins us now. Adam, I've been asking this question all morning. Do we need less bad news for the market to really move higher, or do we actually need good news?
What I would say is we need consistent news. I think the biggest issue for the markets is that uncertainty that comes from the whipsaw of policy changes. You know, we got a deal, we don't have a deal, tariffs, no tariffs, that kind of thing. So I think once you kind of start to see that smooth out, then we can hit all-time highs again. Obviously, you know, I think the momentum is in the direction of this bull run to continue. But that can change, you know, right, at least right now, the way things have been going. That could change tomorrow with one news headline. So we're still cautious, but I would put it in the camp of, you know, cautiously optimistic.
Have you altered maybe your stock bond kind of allocation at all, Adam, to account for this volatility?
Yeah, we did, and we've done a couple of different things. So for us, we had the advantage of, not because we saw this coming, but you know, coming into 2025, given that valuations were, you know, kind of at their, I'm not going to say they were, you know, in a bubble or anything like that, obviously, but they were stretched. And we'd come off 2 years in a row where the S&P had returned over 20%. So we dialed back the risk just because of, you know, we'd had such a good run. We didn't really want to time the market, so we moved more into defensive stocks, low volatility strategies, high dividend paying stocks like that. And so for us, the pivot really came when we saw the downturn into being able to add back to names that we had begun to underweight, like NVIDIA, and just simply taking them back to market weight, which was a win for us to, you know, not capture all that on the downside, but then capture it back on the upside. So right now, we're moving back towards that, kind of trading this a little bit more, where we're starting to dial back the risk again. I do want to reiterate, we're not outright timing and moving to cash or anything. What we're doing, as far as we're just kind of playing the factors and shifting our factor exposure to, you know, more defensive sectors, more defensive names. So since we've had this run up, and we're still thinking there's some potential for, you know, unpredictable markets, we're, like I said, just dialing that back and kind of moving back to the allocation we started the year with.
What do you think then about overseas as well? So there's been a lot of talk about that U.S. exceptionalism trade, and it feels like what we've now learned that means is taking down maybe your exposure to U.S. equities a touch and then just diversifying out, not like dumping U.S. altogether. Where do you sit in that narrative?
Yeah, so obviously, if you had done that earlier in the year, that is a phenomenal trade. Depending on the day, if you're looking at like the EFI index, international developed markets are up 16% relative to U.S. like the S&P 500, and that is a huge difference from what we've experienced in markets over the last really decade, where, like you said, the U.S. markets have really been the dominant player, the place to be. What I would say is that feels kind of like this has gotten a little too overrun. So for us, we're considerably dialing back the international exposure because for us, it's one of those, when we look at the back half of the year and what can outperform, if the U.S. market does move into some sort of recession, which we are not calling for that to be the base case, but if it did, it would be hard for us to see a scenario where international markets like Europe and Japan don't also follow suit. And if the U.S. markets are, off to the races, we think that would kind of create that, the term obviously we use a lot is that FOMO trade, where people would want to get back into the U.S. markets as soon as possible. So I think you would see in that scenario a rush back to U.S. dollar denominated assets. Obviously the dollar plays a big role in that, and you've seen it drop below 100 on the Dixie index. I think we'd see that get above 100. You'd see U.S. stocks pick back up. And not that the international stocks would go down, but they probably would just kind of be flatlined as those allocations were shifted. So for us, we think that if you are overexposed to international, or if you did go overweight international, great job, prior in this year. Now I would shift back towards the U.S. markets.
Adam, thanks so much for joining us. Always appreciate getting a few minutes of your time. Adam Coons, Chief Portfolio Manager, Winthrop Capital Management in Indianapolis, Indiana, with some good commentary there. Well, Bloomberg Surveillance co-anchor Tom Keene and we spoke with Andrew Cuomo, New York City mayoral candidate and former New York governor, in a wide-ranging interview. We began this portion of the conversation by asking Andrew if he is surprised that the Democrats haven't had someone big to challenge President Trump's presence. Let's take a listen.
First, the Democrats have to get the cadence of the game. They are coming up a day late, right? I don't believe this. I believe this immigration and Los Angeles, and it's going to get worse, and it's going to be New York. I believe this works politically for Donald Trump. I also believe it masks the budget debate, which is really the consequential debate for urban America short term. And he's onto a new topic now. And the Democrats wind up a day late, because if you're arguing about the budget today, you're missing Los Angeles and New Jersey and the whole immigration debate.
We're going to wrap up here in a moment here for Bloomberg Television and Bloomberg Radio. Andrew Cuomo with his Politico. There was a mayor from Chicago who can be a little spicy named Emmanuel. He's out this weekend, and Rahm is all wound up about the weak in the woke Democratic Party brand. And I would say he was basically, he as mayor of Chicago, and potentially you as mayor of New York, are the ones fighting the fight to get the Democratic Party to get some backbone. Does that lead to a presidential effort in 2028? I mean, is the Democratic Party going to shift back to that centrist tendency that we talked about in 1985?
Centrist, forget the trying to define political ideology. I worked with Rahm in the Clinton administration. It's sort of practical and common sense, right? The Democrats lost to Trump. Why did we lose to Trump? I don't believe Trump won. I believe the Democrats lost. I believe what happened is the Democrats became disconnected from their people. They became disconnected from the kitchen table issues. Talk to me about my mortgage. Talk to me about my job. Talk to me about the economy. Talk to me about public safety. I don't want to hear about these esoteric issues right now when I'm worried about my life today. And do something for me. You're the Democratic Party. The Democratic Party fundamentally believes in the functionality of government, and you haven't functioned. Show me something that you did for me that made a difference in my life. Joe Biden, you were president. What did you do that I can see, feel, or touch? That's where the Democrats blew.
Paul, this is so important. I want to get back to some of the basic stuff Paul was talking about. I mean, day one, the congestion tax. Day one, bike lanes. Day one, nobody can afford to live in this city. What's the day, Paul asked us earlier, what's your day one mandate to those kitchen table Democrats, independents, and disaffected Republicans?
What they're saying first is make me safe. I'm afraid to take the subways. And I haven't felt that way in 15 years. Make me safe. And that is public safety, that's mentally ill, homeless, et cetera, blending into quality of life. That's job one. And then affordability, I need to be able to pay the rent.
I got 45 seconds because of all the fancy stuff here in the Bloomberg News organization. Your father stopped America with a convention speech. Are you going to be at a convention running for president in the future?
I'm running for mayor, and that's enough.
There you go. That is Andrew Cuomo, New York City mayoral candidate and former New York governor. So, Alex, we had Mr. Cuomo for about 25 minutes, pretty extended conversation. And, of course, he's running in the mayoral primary, which is June 24th for the Democratic Party here in New York, then the general elections in the fall. It's a crowded field. So we spoke to him a lot about New York City issues that he'd be running on. What are the key issues for New York City? And, of course, safety, top of the list. And then we also asked him on some of these national questions. What happened, for example, in Los Angeles over the weekend? So wide-ranging interview. And he had obviously some very strong points. I think most people have a pretty good idea who Andrew Cuomo is.
Exactly. And what do you say about kitchen table issues, like how much you pay for food, etc.? And this will bring me back to an article that's one of the top read. Guys, get ready for it. The Food and Drug Administration said more than 20 million eggs have now been recalled after 21 people were hospitalized with salmonella.
Oh,
Just
great.
talking about, kitchen table issues.
Yeah.
Apparently these eggs, everyone listen up, distributed by the August Egg Company and were sold to retailers like Walmart and Safeway stores between February 3rd and February 19th. 79 people across 7 states have gotten sick with a strain of salmonella linked to these eggs, and that's according to the CDC.
Great. So in case you didn't have enough to worry about, I mean, so we have the chickens now.
We have the chickens, and now we have the
chickens are having the
salmonella.
eggs, but now there's some salmonella in the thing.
And we got to recall that, and then we'll see how that winds up going.
Because I think egg prices have been coming down.
Coming down, yeah.
Because they're making more chickens, which was my suggestion.
They're making more chickens. They're magically making more chickens. And I just used a raw egg yesterday in my carbonara sauce, so.
Really?
Yeah.
They stay over at that side of the room.
Yeah, but we live in Park Slope. We have the fancy Union Market kind of thing, because that's all we got there. We got nothing else. All right, let's take a look at where the markets are. Let me see. Whole lot of nothing is actually happening. You have the S&P is flat, NASDAQ up 0.3%. Volume's not terrible, though, for the S&P and the NASDAQ, but honestly, not a lot of change. We're all looking forward to WWDC, the Worldwide Developer Conference for Apple in Cupertino, California, later on this afternoon. Apple very much underperforming the rest of the FANG index.
Yes.
I don't know if we're a Mag 7 world anymore, if we're back to the FANG acronym.
Yeah, I don't know. But these conferences, these developer conferences used to be real market movers.
Oh, yeah.
Less so these days.
I mean, maybe we've already priced in the lack of market movement.
Yes.
I don't know. We will
AI.
see. Mandeep Singh, Bloomberg Intelligence Senior Tech Industry Analyst, will be joining us after this. This is Bloomberg. Happy Monday.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash, being brought to you by Commonwealth. Join over 2,000 independent financial advisors who are taking control of their growth with advisor-centric support and future-ready technologies. Grow on your own terms with a partner dedicated to your success. Go to Commonwealth.com to learn how. Right now, the major averages, they are mixed. S&P 500, 5 points higher. We're at 6,006. The Dow Jones Industrial average 45 points lower. NASDAQ 100, that is higher, up 41 points. That's up about 0.2%. And investors awaiting any sign of progress in the trade war. It's anybody's guess if the latest China-U.S. trade talks taking place in London today will move markets. Lori Calvasinas with RBC Capital Markets.
We do need to see something pretty meaningful. And what we actually saw after that last China trade de-escalation was, our economists, as well as a number of other economists around the street, really raised their GDP forecast meaningfully. The question is something going to happen that's going to cause that kind of reaction again? We're just going to have to see.
And Warner Brothers Discovery splitting into two independent companies. The best performing stock right now in the S&P 500, up 7.4%. You should count on your electricity bill in June, July, and August rising 4% from last year, mostly because of more expensive natural gas. This according to the Energy Information Administration. So that would bring the nationwide summertime average to $186 a month for your. Actually, it doesn't sound bad, up from $180 last year. Just turn the air conditioner off and open the windows.
Open the windows. Okay.
I got a fan and everything.
But what about
Do
the
they
humidity?
listen?
What about the humidity?
Whatever.
There's no breeze in Brooklyn. There's no breezes in Brooklyn.
There's no. You have the humidity, then the humidity seeps
open
in.
a window and use a box fan. It's much cheaper. Stop turning the air conditioner on.
The humidity gets in.
By the way, I'm not talking to you. I'm talking to my kids.
No, understood. Understood. Yeah. I figured. All right. Thank you very much.
All right, John Tucker, thank you so much. We appreciate that. Alex Steele, Paul Sweeney live here in our Bloomberg Interactive Broker studio, streaming live on YouTube as well. Also on your smart TV, search Bloomberg Originals there. Mandeep Singh joins us, senior tech analyst for Bloomberg Intelligence in our studio here. Lots to talk about. I want to start with the Apple event. Alex and I, they got their developers meeting out there in Cupertino this week. And I remember when this used to be like a really big deal. It's not so big anymore. And if so, why not?
Well, I mean, it depends on where you're coming from. I think for developers, it is a big deal.
Okay.
They're not going to launch any new devices at this show, but clearly in terms of operating system and, AI features on Apple Intelligence, I mean, this is the event.
What's the take on the street, Apple and AI? What's the feeling about Apple and AI?
The consensus opinion is Apple is lagging behind when it comes to AI. And look, they have an integration with ChatGPT, but people don't use it that much because it's not intuitive as it is on a Samsung phone where Gemini is integrated and you can instantiate it a lot more swiftly than a ChatGPT instance on an Apple phone. But look, I think in the end, it comes down to Apple still having that distribution that no one else has. People aren't really switching their phones. No one that I know of has switched from an Apple device to a Samsung because the AI features are better there. And until that happens, they have time. So they will figure out how to best use the models. If the model layer gets commoditized sooner than expected, then it's actually a positive for Apple because
they don't have to differentiate.
In
the same way. Mm-hmm.
Hardware to me is the real lock when it comes to smartphones. People are just so used to using their Apple devices that it's a very hard sell for them to
my
move
oldest he's an engineer, he's an Android guy. He tried to explain to all of us, all the rest of the family, how we have to switch because it's better technology. And we're like, dude, just let it go.
I don't understand how to type on an Android phone.
Yeah, I don't know. It's just, no.
Seriously.
But this is to your whole point.
Yes.
That said, so if Apple's sort of like secure business model is secure and it's not going to go anywhere, it's just a matter of like fine tuning it and getting the right model, etc. What else are you looking at? So if this is whatever, what are you looking at?
So services business is what really drives the terminal value for Apple. Look, everyone is fixated on refresh cycle and when people are going to upgrade their phones. To me, what a lot of people miss is Apple has about 1 billion subscribers that generate services revenue of around 108 billion this year. Think about the magnitude of that business. Apple is considered a hardware company that's got a services business, which is predominantly software subscriptions, 1 billion subscribers, which continues to grow. There are a lot of first-time Apple device buyers, and anyone who buys Apple ends up subscribing to one of their subscriptions.
Well, but hold on a second. But then go back to the AI part, because if they had 1 billion users and they were able to offer something material for AI for like $5 a month that everyone wants to use, that's a lot of money they can generate, but they can't get there.
They will eventually, and that's the bull case. Right now, everyone is writing them off saying, oh, Apple hasn't figured that out in AI, but they don't have to figure it out. They can just offer the best model usage on their platform and charge for it, and that will contribute to services revenue. Services revenue has got a 75% gross margin.
Yeah.
All right. We'll stay on the AI theme because that is the tech story these days. Meta set to throw billions at startup that leads AI data market. What does this mean?
Well, so we know Meta has their own large language model, and they have open sourced it, but still the adoption continues to be way lower than all the other models like OpenAI's and Gemini and what Scale AI offers is data to train your model. So all these companies, whether it's OpenAI, Anthropic, or Google, they use Scale AI data to train their large language models. So what Meta is doing is what Microsoft did very early on with these large language models, invest in OpenAI. So Meta is betting on Scale AI to be that company that everyone wants data from, and they want to be the biggest investor. Remember, these companies can't make any acquisitions. Yeah. They have to do acqui-hires or some of these type of deals where they get a big stake. And eventually, when Scale AI goes public or it really scales up in revenue, then Meta happens to be one of the beneficiaries. And also, they get the data because, as I said, their model is really trailing everyone. In fact, DeepSeek adoption is way higher than Meta's model adoption right now. Both are open source, yes, in the leaderboards. And so they need to improve their model.
What else is on your mind?
Oh, the Apple conference. I mean,
so that's still your jam. All right.
Is. And in the end, it comes down to how much AI is going to contribute to revenue growth, because that's the single biggest driver out there, from chips to software to everything related to tech.
See, so it does matter. So I asked Mandeep what he wants to talk about, and that was literally just...
That was it?
That was it. So there you go.
AI for dummies again. Version like 520. Learning versus inference. Is that the way to break it down? And what are those two things?
Yeah, training versus inference. And so inference on your phone. Again, what Apple will likely show today is you can do a lot of inferencing on your phone. You don't need to go to the cloud to run ChatGPT. There's a use case for Siri to incorporate a large language model, do inferencing on your phone, where you don't need to make a connection to the cloud. It's all private. The data on your phone is using a large language model to act as a voice assistant. And that's another use case where Apple just sits perfectly. I know they don't have the best large language model right now, and everyone thinks they're behind, but where else are you going to deploy your voice assistant? It has to be the phone.
Apple. Right, yeah. So to answer your question, inference is like the stuff that you and I might use.
Okay.
LLMs are the big trainings that then help us use that.
Ah, okay.
So one's the big hyperscalers, large language models, and one's like near us where we can use it.
Because somebody at the bar at Shipwreck tonight is going to ask me about this. I need to have the answer down.
Okay, there you go.
Say, hey, you're smart.
Did I dumb it down enough? Like, is it? We're here.
Nailed it.
I think you got it. Yeah. All right, Mandeep, thanks a lot. We always appreciate you. And Mandeep Singh, Bloomberg Intelligence Senior Tech Industry Analyst, joining us there. Still pointing out, as long as people are buying the iPhones and having iPhones, switching over is going to be really hard. Therefore, thus, they're going to be okay when they eventually wind up finding their AI model. All right, coming up, Ben Elliott is Bloomberg Intelligence Consumer Finance Analyst. He'll be joining us on Walmart credit cards returning to Synchrony after that pact with the fintech company. We will break down what that means for both companies. And again, I really feel like Synchrony was out of GE.
Really? Well, we can do a little.
Unless I'm really wrong, and then that's very possible. But we're going to figure that out and break that down. That's coming up next. This is Bloomberg Intelligence. Happy Monday.
This is Bloomberg Intelligence with Paul Sweeney and Alex Steele on Bloomberg Radio.
All right, it seems like everybody has a branded credit card. We're going to talk about that in just a moment. Alex Steele and Paul Sweeney live here in the Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Walmart credit cards return to synchrony after a fintech hack. Everybody's got the branded credit card, including our good friends at Walmart. Ben Elliott joins us, consumer finance analyst for Bloomberg Intelligence. Ben, talk to us about Walmart here. It seems like a big deal for Synchrony, because I thought at one point Synchrony was the financial partner of Walmart. So fill us in what's going on here.
Yeah, so they had it for about 20 years, right up until 2018, when the renewal sort of negotiations between the two companies got contentious. Walmart was demanding too much for Synchrony, and so Synchrony sort of backed out. And at the time, it was a really big deal, and so this is an equally large deal that they're coming back.
Why did it go away?
So the way Synchrony works is they have these large partners, right? The top 5 partners are more than 50% of their net interest and fees. And what they do is they share the economics with the partner programs in something called a retailer share arrangement. So every couple of years, the partnerships are up for renewal, and Walmart is a gigantic corporation. They have huge leverage, and they were demanding essentially more of the economics than Synchrony could provide and still be profitable.
Ben, talk to us about these kind of branded credit cards, if you will. I mean, my daughter is a master at managing points and doing all that kind of stuff.
It's like a full-time job.
It is, but it pays off every time she's traveling somewhere. It's on points. It's on points. Talk to us about that, the business of those kinds of cards and kind of the economics.
Yeah, so Synchrony is not so much in that business. They're in the business of providing a credit option, usually to sort of a lower creditworthiness, lower income borrower that is really focused on a single retail partner. So this partnership is going to be, there's going to be 2 cards. One's a general purpose card that kind of does what you're talking about, but the rewards sort of value proposition will typically be a little bit lower. The card will be more accessible. And then the other card will be just used at Walmart. And details are still pretty light on what the reward structure might look like, but the goal is to drive throughput at Walmart and not necessarily at sort of other retailers.
So they also have cards with like JCPenney, Lowe's, Amazon, PayPal, for example, and you mentioned sort of a different type of band of consumer. How is that band of consumer doing?
So Synchrony likes to say that they're managing, they're not thriving, and they're not struggling. This is it's sort of like a subset of wallet share, right? So this is the Synchrony is just seeing how these consumers are behaving at a single retailer for the most part, but there's not a lot of stress. But if you look back at 2018 when they first decided not to renew the Walmart partnership, it's kind of overnight their charge-offs went down like 60, 70 basis points. So presumably this particular customer set is charging off a little bit higher, like maybe 1 percentage point higher than your typical borrower. So there's going to be, it's an interesting time for Synchrony to go out and look for these sort of more marginal buyers, basically to get growth.
Ben, your coverage of consumer finance companies, you get a good view, those companies get a good view of how the consumer is doing, how they're spending their money. What are you hearing from these companies these days?
So if you look across spending categories, everything is still typically growing a couple percentage points above GDP. There's one obvious standout, which is travel, which is basically people cutting back on their most incremental spend. But if you kind of think about travel, right, you're booking your flights a couple months, maybe a year in advance, and growth in that category is down double digits. So if you kind of extrapolate that forward, will we see a similar shrinking in hotel spending, entertainment, leisure, things like that? Could be a little bit of a canary in the coal mine.
What is Synchrony's flexibility when they're managing, when they're saying that their consumer isn't thriving and they're not dropping off, but they're managing? What does that translate for Synchrony?
Well, so this goes back to what we talked about, the retailer share arrangements. So you share both the profits and you share the costs, right? So, if charge-offs were to rise, the retailer, in this case Walmart, is going to pick up some of those charge-offs. So that kind of softens the blow a little bit for Synchrony as an issuer. But they have other sort of tools in their toolbox. One big one was the late fee, which CFPB had been trying to cap at $8 instead of about $30. But they can use those things like that to incentivize borrowers to pay even when it gets to be more painful.
Ben, are your consumer finance companies, are they talking about credit quality concerns at this point yet?
Credit quality is still great. For companies like Amex, it's pristine, unimpeachable. But the thing to look at is delinquency, just the mechanics, the way charge-offs work. First, you have to go delinquent before you stop paying. And we're not really seeing any sort of increase beyond kind of like seasonal trends in delinquency.
I mean, that's a pleasant surprise. I would have thought we would have been seeing it a little bit more, but the consumer.
But Amex is will be a different type of.
Oh, Amex would, but I'm talking just general credit cards. We haven't really heard it too much yet.
Yeah, no, it's true. It's true. I guess the question is ... when. Hey, Ben, thanks a lot. We really appreciate it. Ben Elliott, Bloomberg Intelligence Consumer Finance Analyst, joining us on Synchrony. Okay, well, that's a Monday.
Sure.
I mean, we'll see if we get any movement anywhere so far this week. We do have PPI and CPI, so that's something, and
Wednesday,
any sort of headlines that come out of trade deals. But again, it's like, do you just need less bad news or do you need good news?
Right.
What really propels us to take out that all-time high?
Yep, exactly. So, but mixed messages on the market today, with the S&P up about 7 points, the Dow down 28, and the NASDAQ up 61. So not a lot of direction. I'm going to quote oil for you. We're at $65 for WTI crude.
Well, that's a comeback.
That's something.
And that's with OPEC announcing that they're going to continue with hikes. Morgan Stanley, though, saying that potentially you're not really seeing the impact of those hikes from OPEC Plus in the actual physical market. All right, for our listeners in the U.S., here's a reminder for you. You can listen to us via satellite radio on Sirius XM, channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM, channel 121 is presented by Ship Station. Stay with us. Your top stories and global business headlines are coming up right now on a very calm Monday morning. This is Bloomberg Intelligence.
CBS News on the Hour, sponsored by Progressive Insurance.
I'm Cammie McCormick in Los Angeles. After 3 nights of protests over federal immigration raids, the destruction is evident. Rick Montanez is there.
A lot of damage and destruction out here. We are just off the 101 freeway across from one of the federal buildings, a few blocks from the Federal Detention Center. And you see these cars here. These are Waymo cars that were vandalized and then set on fire, and they burned down to the ground completely. We're still seeing a large police presence, but at this point, not really much in the way of protesters, at least not yet anyway.
In the meantime, the governor's threatening to sue over President Trump's deployment of the National Guard. Legal analyst Jessica Levinson.
Governor Newsom is saying you're invading on state sovereignty. We don't want the National Guard to be federalized. And not only did we not ask, we're actively saying we don't want them here.
Scott McFarland reports on the latest on the Maryland man mistakenly deported to El Salvador and brought back to the U.S. to face charges.
We expect him back in the federal courthouse in Nashville at some point this week for the next step in his new federal criminal case, this smuggling case and this case that has brought 2 felony charges so far against Abrego Garcia, with the Department of Justice leaving open the door to perhaps bring more.
President Trump's new travel ban took effect today. It bars citizens from 12 mainly African and Middle Eastern countries, as Stacey Lynn reports.
The president says the ban is necessary to preserve national security and prevent terrorism, saying the countries had deficient screening for passports and have historically refused to take back their own citizens.
The Trump-appointed head of the National Institutes of Health calls dissent the very essence of science. Today, health workers wrote him a letter that said, "We dissent," and outlined how new policies are impacting their work. Jim Grasula has that.
The letter says Trump administration policies waste public resources and harm the health of people worldwide. Jenna Norton signed the letter.
What is happening at NIH is so egregious. The harms that we're seeing happen to our research participants and to public health.
The NIH workers readily admit they have jeopardized their jobs.
Some very important trade talks are taking place in London between the U.S. and China. The White House's Kevin Hassett.
The purpose of the meeting today is to make sure that they're serious, but to literally get handshakes and get this thing behind us.
Investors on Wall Street are carefully watching for any signs of progress in those talks. On Wall Street at this hour, the Dow Jones Industrials are down just slightly, about 28 points, and the S&P 500 and NASDAQ are flat. This is CBS News. authorities in Tennessee have finally caught up with a wayward zebra. Deborah Rodriguez reports.
There's a zebra in a bag.
Ed the zebra has been captured in Rutherford County after he escaped from his owner's home outside Nashville more than a week ago. Video from the local sheriff's department shows the animal dangling in the air below a helicopter as rescuers fly him out of a subdivision in the community of Christiana. He's been trailered back home. His owner tells CBS News Ed is safe and 100% healthy. Deborah Rodriguez, CBS News.
Warner Brothers is splitting off its cable operations from its streaming service, creating two independent companies. The move is an effort to adjust to so many people cutting the cord with their cable companies. HBO and HBO Max will become part of the streaming company. The cable company will include CNN, Discovery, and TNT Sports. I'm Cammie McCormick, CBS News.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
The big dance begins in London. Welcome to the Monday edition as the world's two biggest economies meet on trade. We'll have the latest on the U.S.-China talks underway today with Bloomberg White House editor Jordan Fabian, with the S&P 500 now back above 6,000, just like nothing ever happened. California Governor Gavin Newsom accusing President Trump of illegally sending in National Guard troops to the streets of L.A. A wild weekend. We're going to talk about the political fallout with Republican strategist Ashley Davis at S3 Group, with analysis later from our political panel. Bloomberg Politics contributor, Democratic analyst Jeannie Shanzano, alongside Republican strategist Lisa Camuso Miller. Today, it's all after a look at Wall Street with his 6,000 hat on. Charlie Pellet joins us with the update on the markets from World Headquarters in New York. Hey, Charlie.
Well, hello there, Joe Matthew. Happy Monday. 6,008, where we stand right now on the S&P 500 index. Stocks pushing higher for the most part, up 8 points right now. That is a gain of 0.1%. We've got the Dow Industrials, though, in the red, trading lower by 38, down now by 0.1%. A NASDAQ up 68 for the NASDAQ Composite Index. That is a gain of just about 0.4%. The 10-year at 4.48%, with a 2-year 4.00%. Gold up $18 the ounce, 33.28, up by about 0.5%. And West Texas Intermediate crude up 0.3%, 64.81 for a barrel of WTI. Bitcoin back well above 107,000, closing in on 108,000, up now by 1.6%. So stocks, bonds, and the dollar all seeing small moves. Trade talks between Washington and Beijing kicking off in London. Our Jordan Fabian will have a whole lot more coming up in just a moment. Keith Lerner is Chief Market Strategist at Truist Financial, and on surveillance this morning, he told us investors are broadening their list of concerns.
It's almost as if that we were focusing on just one T, which is tariffs. Now technology is back into the forefront. I think the market is just, dealing with the uncertainty around tariffs. It matters, but it's not the only thing that matters today.
Keith Lerner of Truist interviewed on Bloomberg Surveillance. Warner Brothers Discovery says it will separate the company into two publicly traded businesses. Shares of WBD, they're up now by 5%. Again, recapping, S&P holding on to a 6-point gain above 6,000. 6,006 right now, up 0.1%. And Balance of Power continues right now. Back we go to Washington once again. Your host, here he is, Joe Matthew.
All right, Charlie, good to see you. Hope you all had a great weekend, and welcome to the Monday edition of Balance of Power here on Bloomberg Radio, satellite radio channel 121, and YouTube, where you can find us now. If you're not already watching, search Bloomberg Business News Live. You catch our live stream here in Washington and from New York throughout the day. Add Bloomberg Originals, and we've got a powerhouse here to start the week, with much happening, of course, as we look to both coasts today. We used to talk about the three-ring circus, and we've got one. We're painting out of three buckets once again. You've got what happened over the weekend in Los Angeles, the president's decision to call in National Guard troops moving around the governor in something we hadn't seen since the mid-1960s. The political fallout is real. You've also got U.S.-China talks happening, with the resumption of talks today in London, as we mentioned. This is a big one, of course, for our audience, and a big one for the markets, with the S&P 500 hanging above 6,000. Remember that? It was 2 months ago today we fell to our low for the year after Liberation Day. We've clawed our way all the way back up, just about, back above 6,000 without a single trade deal, at least a real comprehensive trade deal being announced. What was it, James? 90 deals in 90 days. Maybe we'll get one today. Kevin Hassett was on TV earlier talking about a handshake. They're just getting in a room to shake hands and codify what's already been agreed upon. And if that happens, maybe we'll get a readout later on today, and maybe it'll move the markets for the better. If you're with us on YouTube, you can see the negotiators heading into the meeting today. Scott Bessent, Howard Lutnick, Jamieson Greer representing the United States, marching in there. Pay no attention to the stories of Scott Bessent literally getting into a fist fight with Elon Musk. Part of the residue of the breakup last week, but I digress. There's a big Invest event, 2 o'clock, by the way, right around the time Bloomberg Business Week begins. It's going to be about the Trump accounts for newborns and so forth, but it's going to be a who's who of corporate America. The CEOs of Dell, ARM, Uber, Goldman Sachs, ServiceNow, and Robinhood are all expected to attend. So that's where we are in sports here. Lawmakers coming back into town. They're going to deal with reconciliation. That'll be a big theme as we get into the week a bit further. But we want to dial in on U.S.-China trade talks with the help of Jordan Fabian, Bloomberg's White House editor, who is turning stories left and right on this from both sides of the Atlantic. Jordan, it's great to see you. Should our expectations be as high as Kevin Hassett, and why is this as simple as a handshake? What are we actually going to hear about today if it comes down to rare earth minerals, batteries, and so forth?
Well, like you said, Joe, this is more of a handshake to codify what had already been agreed to last month in Geneva. And so we might hear noise about China has agreed to restart exports of rare earth minerals, and the U.S. may have taken off some of the export controls that have been really ratcheted up recently. But my question is, what does that all amount to? Obviously, the critical minerals are very important for auto manufacturers, military contractors, et cetera.
Yeah.
Getting those started back up is a big deal. So I don't want to discount that. But if we're viewing this in the prism of this is going to end up with some kind of grand bargain between the U.S. and China on trade, we're sort of back to where we started in May without headway made toward more of the meatier issues that are on the table.
What are we giving up here in terms of export controls and so forth? Hassett was asked about this, and we're not talking about sending H-20s or Blackwell chips over to China, but lower grade chips. Have we been holding them up and we're about to release them?
There were some other export controls that were slapped in the last few months on some of those lower grade chips and some other critical technologies for China. But again, this is all moves that the U.S. made during that ramp-up period that we saw when tariffs went up to 145%. And so, again, those are taken off. We're back to the March baseline, and it's June, and so where are we, and what are we going after here? Those are some big questions, I think, still coming out of this meeting.
What would count as a breakthrough, just getting everything done that you've already mentioned, or could they move the ball, set up another meeting that's going to actually dig into tariffs and some of the real matters at hand?
I mean, look, this is a multifaceted relationship. I know these talks are on trade, but you have these long-standing complaints through both parties' administrations on Chinese unfair business practices and intellectual property theft, and so do we make any dents on that? And then for China, is there any dents on like student visas and some of the things that they're concerned about that the Trump administration has imposed?
Not likely by July 9th, though, right? I mean,
no. Well, it's important to remember the China deadline is August, because that 90-day pause is separate from the other 90-day pause. A lot of 90-day pauses.
Well, there are, and I appreciate your delineating, because July 9th will be a whole lot of other countries when it comes to reciprocal tariffs. Is the ball moving on any of them?
He's really had a lot of difficulty making headway, and there was a lot of optimism last week after the president called Xi Jinping and set up this meeting today, but it really belied the fact that the progress has been slow going with other partners. And so you have countries like Japan and India trying to get a deal done perhaps by the end of the month, certainly by July 9th. Remember, there's that G7 summit coming up this month where Trump's going to be in front of a lot of these leaders who want a deal, but there's been talks, there's been a lot of positive moon music, but not a lot of headway made, at least that we've seen.
Spending time with Jordan Fabian, our great White House editor here at Bloomberg in Washington, and we've just got a new post on Truth Social as we're talking here, Jordan, which tends to happen whenever we get together. We made a great decision, he writes, in sending the National Guard to deal with the violent, instigated riots in California. Of course, writing about what happened in Los Angeles over the course of 3 days, protests and some pretty violent clashes with police. Jordan, the president says if we had not done so, Los Angeles would have been completely obliterated, realizing that this was isolated to a pretty small part of the city. The very incompetent governor, Gavin Newsom, he writes, and Mayor Karen Bass should be saying, "Thank you, President Trump. You're so wonderful. We would be nothing without you, sir." Instead, they chose to lie to the people of California and America by saying that we weren't needed and that these actions are peaceful protests. He says a few more lines with America Great Again at the end of it. Of course, Gavin Newsom is accusing the president of breaking the law, illegally calling up the National Guard troops, 2,000 of them, to the streets of L.A. I've got a few questions for you on this, and we're going to get into this more with Ashley Davis. But you were covering the first administration. Weren't you covering the administration? Maybe you were even at the White House the day things went south in Lafayette Square when he held the Bible up. And you saw troops rolling through. Was this starting to feel familiar to you over the weekend?
It's certainly familiar, and one could argue that it's even escalating beyond what he did in his first term.
Yeah.
I think Trump has long wanted to use the military to project his power on U.S. soil, which there's obviously a lot of legal and constitutional and sort of symbolic tie-ups with that, pitfalls. So what we're seeing in Los Angeles is him, I think, seizing this opportunity where there was some unrest, as you said, contained, to really escalate the federal response. And I'll also note that this is coming on the same week that he's staging a military parade here in Washington, D.C., and just wanting to use these symbols of power on our soil, which really is not something that's traditionally been done by U.S. presidents.
For sure. You've got the Secretary of Defense threatening to call up Marines from Camp Pendleton. This is an interesting moment here, Jordan. You mentioned that parade. This is happening, right? It's going to be Saturday.
Right.
Massive parade of tanks and so forth. We saw them coming in on flatbed train cars over the weekend. Military flyby. Do we know what the president's going to be doing? Is he up on the balcony watching this, or what's the day going to be?
Yeah, I think there's going to be some kind of viewing stand set up.
Yeah.
Not sure about remarks or anything, but certainly the big parade he's wanted for a very long time. Yeah, I was covering the White House when he went to France for Bastille Day. I believe it was 2017. It was a big military parade there.
He wanted one of his own.
Yeah, and he really got enamored by that. He was just enthralled by that display, sitting alongside French President Emmanuel Macron. And here we are, I guess, 8 years later, and he's got his wish. Yeah,
it's going to be quite the presence of troops, tens of thousands of troops staying in federal buildings. In the seat you're in, D.C. Mayor Muriel Bowser told us the end of last week, when I asked her about the potential for streets needing to be repaved and so forth, she said that's up to the military. They have the resources. So apparently that would be the Pentagon repaving Constitution Avenue if need be.
Yeah, well, we'll see how it works out. I mean, it might be that the city's on the hook for doing the work, and then they might have to ask for a reimbursement from the federal government, and they're going to pay up. We'll see.
They got nothing going on in Capitol Hill right now, including the D.C. budget. Jordan Fabian, great to start the week off with you, Jordan, as always. Bloomberg's White House editor. When you see the stories on the terminal and online, it's got Jordan's fingerprints on them, keeping us honest here on the fastest show in politics. As I mentioned, Ashley Davis will come in next. We're going to zero in much more carefully on what happened in L.A. over the weekend and what might follow for the rest of this summer. Straight ahead on Bloomberg.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. U.S. stocks trading a little changed right now. The Dow Jones Industrial Average was briefly higher before dipping back in the red, down 12 right now. Real little movement today for the Dow, down now by less than 0.1%. We've got the S&P up 0.1. NASDAQ higher by 55 for the NASDAQ Composite Index, looking at a gain right now of just about 0.3%. Your 10-year at 4.47%, with the 2-year currently yielding 3.99%. Spot gold up $21 the ounce, 33.31. That is a gain right now of 0.6%. West Texas Intermediate crude 64.83 a barrel, up 0.4%. And Bitcoin just about at $108,000, up now by 1.7%. Tesla shares are now trading higher by 0.5%. This on a day when it was hit with a pair of downgrades, underscoring mounting concerns on Wall Street about the EV maker's outlook following last week's clash between CEO Elon Musk and President Trump. Again, Tesla shares trading higher now by 0.5%. Both Argus Research and Baird cut the stock to the equivalent of hold ratings. Again, recapping here, we've got the S&P up 8 right now, up 0.1%. Balance of Power continues now, the Monday edition. Back we go to Washington. Once again, your host, Joe Matthew.
All right, Charlie Pellet, thank you so much, Charlie. As always, watching Wall Street for us here on the Monday edition of Balance of Power. We all started our day listening to the same conversation. When I heard Tom Keene was going to be interviewing Andrew Cuomo, I canceled my plans at 9 o'clock on a Monday morning. Fascinating back and forth here in a conversation you would only hear on Bloomberg, and of course, took on a very different direction following the protests that we saw in L.A. Not just the protests over the weekend, but the clashes with police, President Trump's decision to send in the National Guard, the Secretary of Defense's threat to mobilize Marines from Camp Pendleton. Donald Trump, just on Truth Social a short time ago, it was a great decision, he says, to send the National Guard to California. If we had not done so, Los Angeles would have been completely obliterated. Now, knowing that Andrew Cuomo is running for mayor, he's, of course, got his own ideas about a Republican president sending National Guard troops to the streets of a major American city. Listen to Andrew Cuomo earlier on Bloomberg.
This gets into President Trump's strategy, I believe. And look, first of all, on the immigration issue, he was very clear in his campaign. He believes it's an issue that works for him. During the campaign, he said he was going to deport criminals, dangerous criminals. And everybody said, yes, support dangerous criminals, of course. Now we're deporting 7-year-olds and we're disrupting families. And by the way, we're deporting people who shouldn't be deported. So that's a change. But this issue works for the president politically. The president is also very good, and I worked with the president in the first Trump administration, worked with euphemism. We had a lot of controversy, but this is a different tempo for him. Wayne Gretzky, skate to where the puck is going to be, not where it was. The Democrats have to adjust. They are skating to where the puck was. This immigration issue, in some ways, is a distraction from what Trump is really doing with cities, which is cutting the budget in a way that is so dramatic that you could really cause major difficulties for urban areas.
Governor Cuomo, pro tip, when you're going to talk a hockey, you're in a mayoral race, you pick Jean Rattel or someone like that with the New York Rangers. You don't go with Gretzky. Andrew Cuomo with us here as we look at this mayoral race. Okay, Robert Kuttner, no friend of yours, writing in American Prospect. He says, did Cuomo peak too soon? You've got the tensions of the primary. If you take the primary, the tensions of a general election with different independent candidates, and that is the present mayor in the back pocket of the president of the United States. And if we get L.A., as Paul mentions, here, can you imagine this? I mean, I'll let you pick the geography, Governor Cuomo, but the present mayor of New York, can he protect the citizens of this city, given the relationship with the president after what we've seen in L.A.?
Short answer, no. And let's remember how extraordinary these issues, what's happening in L.A. This is the exact reverse of what normally happens. Normally, it's the local government that makes the decision on how to handle an emergency and calls on the federal government. So a mayor or a governor would call on the federal government and say, I need help, please send the National Guard, or please send in additional federal help. I don't believe there's been a time where the president has sent in federal troops. You'd have to go back to like the 60s, and President Johnson and Wallace, right? That's how far you have to go back. So this is Trump being Trump. This is Trump on this issue of immigration. I'm muscled, it's law and order. These cities, these Democrats, they're filled with illegals, and I'm going to come in, and I'm going to come in hot and heavy. He started in L.A. It will happen in New York. It will happen. He knows the formula, right? It happened in New Jersey.
Is this formula to go after you? I mean, this is anticipated.
His formula is to create chaos in the cities, and he is the voice of law and order. And you know, cities, all those Democrats, that's where all those illegal immigrants are, and he's going to come in and he's going to clean up. The flip side is, okay, create chaos in LA, create chaos in New York, create chaos in Chicago. Pretty soon, you create chaos in the nation, and that's bad for the economy.
Andrew Cuomo in a fascinating back and forth with Tom Keene here on Balance of Power. I'm Joe Matthew in Washington, adding the voice of Ashley Davis, Republican strategist, partner at S3 Group, former special assistant to the Director of Homeland Security. Ashley, it's great to see you. We just heard this whole conversation with Andrew Cuomo. You saw the back and forth. You heard me read President Trump's tweet earlier today. He says if we had not done so, calling up the National Guard, Los Angeles would have been completely obliterated. We can talk about the directive and what law this falls under and how we're defining insurrection. Politically speaking, good move?
Yeah, I actually am not sure that interview that Cuomo did this morning is going to be helpful for him. I just want to take a step back. For Cuomo, no, because, I mean, listen, a lot of people, whether you live in New York or not, are very unhappy with how New York has been as a city, especially as post-COVID in regards to some of the crime. And he's running on a law and order platform, so you would think that this is something maybe from a states' rights perspective he can't be for, but I'm assuming he would want to make sure that New York does not turn into what's happening in L.A. But yeah, to answer your question, absolutely this is a good political issue for the president. I don't think he cares one bit that if you see destruction happening in L.A. and the Mayor Bass and the governor are not doing enough to stop the destruction, especially when they're burning buildings, they're burning cars, his biggest issue is the fact that they're covering their faces and not having any ability to see who they are. Again, are these really protests from LA, or are they brought in like they have been in other places? But this is a winning issue for him. I would love to see polling on this in a week, because I would think most of the country would say why. The 40 people, and it's a very important fact, the 40 people that were arrested that sparked these protests this weekend, there was a layout this morning of the crimes that each one did. I mean, they're bad crimes. They're either murder, rape, significant burglary. I mean, it's not like that the people are protesting for, as Cuomo said, children and people that are, on their way to citizenship. Yeah. So this is something that's going to be very tough for Democrats to come over. And in my opinion, they're taking the bait over and over and over again. I mean, this is something that we've been talking about.
Seems Gavin
it's like
Newsom
an 80% issue that people support us cracking down on stuff like this.
Yeah, Newsom was telling people not that this was performative. Don't play into the hands of the administration. And I'm wondering what you thought of Newsom pushing back on this. This played out on television in a pretty remarkable way, with Tom Homan threatening to arrest the governor and the mayor of L.A. Let's hear the response from Gavin Newsom on MSNBC.
He's a tough guy. Why doesn't he do that? He knows where to find me. But you know what? Lay your hands off 4-year-old girls that are trying to get educated. Lay your hands off these poor people that are just trying to live their lives, man. Trying to live their lives, paying their taxes, been here 10 years. The fear, the horror, the hell hell is this guy? Come after me, arrest me. Let's just get it over with.
This is wild stuff.
It's
good politics
almost
for
as
him,
good
too.
as I was just going to say, it's actually making Newsom relevant again. I mean, that was kind of, you know, if he truly does want to run for president. But again, I mean, maybe times will change in 3.5 years when we have another president. But I mean, like, this does not show tough on crime, which was such a big issue this time around.
Okay.
I mean, again, we know the President Trump may go too far and the pendulum swings. So who knows?
Right.
We'll
was
see.
arresting the governor going too far?
Well, I don't think it's going to happen.
You know,
I mean,
but that would maybe qualify as
yeah,
too
I mean,
far.
this fighting on TV stuff, like whether or
Ask
over,
Elon.
or over social media, is just a new norm.
This is quite a moment
And
our society
yes,
is in here,
yes.
isn't it? Well, so let's talk about the actual fine print, because you used to do this for a living. The directive signed by the president cites 10 U.S.C. 12406, referring to a provision in Title 10 of the U.S. Code on Armed Services. If there's a rebellion or danger of a rebellion against the authority of the government of the United States, it allows the federal deployment of National Guard forces.
Yeah, I don't think this is.
Are we calling this a rebellion?
What else would you call it?
A protest?
But the protest isn't just it's not a peaceful protest.
No.
It's a destructive protest. I mean,
Well,
you saw the stuff. I mean,
sure.
you saw what was happening. I don't think it's like people holding signs.
Well, it kind of started that way in some cases, and I'm not here to weigh in on that one way or the other, but when you start thinking about an insurrection, we don't want to call January 6th that, but we're calling this an insurrection to qualify for the deployment of troops.
We may agree to disagree on
I'm
this
gonna get a lot
issue
of hate
because no, I just think that there was enough destruction going on. I mean, listen, everything else is in the courts. Obviously the governor did sue the president for doing this.
Yes.
You know, I just have one thing to say. Katrina wouldn't have been as bad as Katrina was if the local government then would have allowed President Bush to call in the National Guard, and he did not overturn the mayor at the time of New Orleans, and that was when right after the levees broke and whatever, and that was one of the biggest destructions in our country. I mean, I think that this is a very fine line, but again, legally we'll see. I'm sure it will be in the courts, but politically, like, president's like, bring it on. He's going to be in the courts for the next 10 years till anyway.
Well, I guess that's for sure. As a Homeland Security specialist, do you worry about the idea of Marines being deployed? And I realize that that's likely just a threat from Pete Hegseth, but would that be a line to cross?
I think that's a tougher line for sure. I mean, the Marines, and you have guns, and you'll have obviously troops, and it's a whole different scene. I think unless people are getting killed, if you see major destruction in regards to buildings burning, I mean, more than is already happening, I just can't imagine that happens, but we'll see. One thing that we were talking about before the air is, like, does this spread through city to city to city, like some of the things that happened during COVID? You know, obviously George Floyd, I mean, we can go down some of the issues, but that's what you don't want to see happen.
Well, that's my question
is this
for
a call to, is this going to be a Democrat's call to action? Are they going to fall on the hill on this issue and call for protest? I'm not sure if you don't have kind of what's been happening with a lot of these protests, not necessarily immigration, but a lot of these professional protests that have been happening with destruction over the last 5 to so years, is you have people that are hired to come destroy things just to make chaos in the country, whether you believe it's Russia or China or whatever. So but I would think anyone running for president is not going to want this they're not going to fall on their swords on this.
Well, this is what I wanted to get to you with, as someone who's actually been in the building. You're looking at the great unknown of this summer inside, we'll say, the Department of Homeland Security. How do you start modeling for the possibilities? Because this could, in fact, go into other cities. What if this did go into New York, as Tom Keene was discussing with Andrew Cuomo? What if there's another Occupy movement? Is that what Homeland is working on now?
I'm sure they are. I think you have, and also you have a lot of events coming up, whether it's, a year from now is America 250, but we have the parade this weekend. You have a lot of different opportunities for chaos, but also what the department is doing right now, along with the DOJ, is really concentrating on some of the destruction in regards to anti-Semitism. So you have the anti-Semitism, you have the anti-immigrant movement, and then you have the flames being flared, that if you're in the coordinating of state and local law enforcement right now within the Homeland Security Department, you are making sure that everyone's prepared for something to to something to happen, especially in the major cities.
Did you see the footage of this Australian reporter who was on the streets in Los Angeles, and she's talking about the response from the police? It was right around the time they started shooting rubber pellets or the bean bags and so forth, and deploying the tear gas. I don't know if we have this for our audience on YouTube, but she's actually live in Australia. This is the video from this situation, and she's shot in the leg while she's out there. This is the type of thing that can really change the way a story plays in the media. There you see her being shot, and we don't hear her screams right now if you're with us on the radio, but it was a bit of a scary moment for her. These things can turn pretty quickly in public opinion, the way this is handled by authorities on the ground.
If you see peaceful protesters being strong-armed by the military, whether it's especially like the National Guard, yes, this can definitely change the conversation quickly. Obviously, that's super unfortunate. I hadn't seen that.
Yeah.
But by the way, there's going to be propaganda on both sides. You're going to see the same video of the guy with the Mexican flag and the taking selfies, burning and burning the car and the mask.
Something particularly dystopian, by the way, about protesters burning robotic vehicles. I think we have truly reached a science fiction phase when we see stuff like that. But the aftermath here could be interesting. What happens in the next couple of days in Los Angeles? How do you cool the temperature?
Well, hopefully, I'm from what we're seeing today, there's not as many protests. There is less and less. I mean, it would be great if they stop, and and then everyone kind of backs off. It's just what's scary and what's making me a little nervous, and going back to your Department of Homeland Security, making them a little nervous, and local law enforcement, is if this does escalate.
Yeah. Could New York handle a situation like that better than L.A.?
Well, I think the current mayor of New York would handle it pretty well. I mean, and that is not a political statement one way or the other, but I think he saw, it's an election year, obviously there's
former cop.
Yes, but I think that he would probably call in the help. You saw that city was destroyed. It's starting to make its way back. Same with L.A. There has to be a grasp on some of this, not because of the protests. I'm just saying in general what's happened.
Well, I appreciate your point of view. We went into overtime because I really wanted to hear what you had to say about this. This is a very delicate moment, and we're lucky to have Ashley Davis bring out one side of this argument for us. From S3 Group, great to have you, and thank you.
Thanks. Nice
Ashley,
seeing you.
as always, with us on Balance of Power. We're going to play this to the panel next. Jeannie Shanzano is here, Lisa Camusa-Miller, as we try to get to the bottom of the politics of this, what the fallout will be, and exactly what the administration should be doing. We're watching Wall Street as well, with U.S.-China talks getting real in London today. The latest session is underway with the Treasury Secretary, the Commerce Secretary, and the U.S. Trade Representative, all speaking with the delegation from China about a range of issues, from rare earths, batteries, to export controls, all, of course, at least aimed at some point at generating a comprehensive trade deal that might knock down some of the tariffs that we've been talking about. Wall Street doesn't seem to be too concerned about it, though. We're floating ever higher above 6,000, and we want to update the markets for you with the help of our friend Charlie Pellet at World Headquarters in New York. Charlie, how's it look?
Right now, we are higher across the board, Joe Matthew, since our last update. We do have the Dow Jones Industrial Average up now by 4 points. Little change, perhaps the key takeaway here, as investors keep an eye on those London, U.S.-China trade talks for signs of easing tensions between the world's two largest economies. S&P 500 index making a run for the best level of the session, up 10 right now, 6,010. That is a gain of 0.2%. We've got NASDAQ higher by 79 points, up 0.4%. Our Mag 7 index up 0.6% with the 10-year, 4.47%. The 2-year right now, 3.99%. Gold is up $23 the ounce, up 0.7%. 33.33 an ounce on the precious metal. West Texas Intermediate crude up 0.3%, 64.76 a barrel, and Bitcoin now at $108,100 on Bitcoin. Indeed, a busy week for economic data with a report Wednesday on May consumer prices. As for the broader backdrop, specifically jobs, Claudia Sahm is chief economist at New Century Advisors, and she was interviewed this morning on surveillance.
There are real signs of slowing, and we are seeing some modest slowing. It's not happening rapidly, and that's important. But the labor market, especially in terms of the Fed's thinking, they're close to their mandate. I mean, there is a reason why they're giving such focus to thinking through what's going to happen with inflation over the coming months, because largely they're in a good place on the labor market side.
Claudia Somm of New Century Advisors, keeping an eye on Apple shares right now. They're up 0.3%. Apple's annual developers conference, WWDC, is underway, and it may highlight the company's struggles with artificial intelligence, which could further weaken its shares. Today, Apple up by 0.2%. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. And back we go to Washington. Once again, your host. Here he is, Joe Matthew.
All right, Charlie. Thanks, as always. Charlie Pellet watching Wall Street for us here on Balance of Power as we reach for the next answer when it comes to reconciliation. The questions have not changed in a while. We're waiting for the Senate to show up with its version of President Trump's big tax and spend bill. Are we done calling it a big, beautiful bill? The big tax and spend bill. The question about tax breaks, will they be permanent? Business tax breaks, not just individual Trump tax cuts, but also, of course, Medicaid. I'll say changes for the benefit of this conversation. And then, well, if you're watching or listening to Bloomberg, the granddaddy of them all being SALT. I mention this because the Senate Finance Committee is going to put forth its part of the bill, the big, beautiful bill, this week. Mike Crapo, Republican, Wyoming, the chair, is behind the drive to make these tax breaks permanent. That's going to change the whole dynamic now, because we're hearing that SALT is going to come down. We're hearing that Medicaid changes could happen, maybe the provider tax, with worries about the impact on rural communities. And that could be enough to sink this bill when it goes back to the House. It's about to happen. Senator Crapo is going to put forth his bill this week. And you better believe that the Speaker of the House, Mike Johnson, is holding his breath right now. Let's assemble our panel for their take on this and a lot more. Jeannie Shanzano is with us, our Bloomberg Politics contributor and Democratic analyst with the Center for the Study of the Presidency and Congress, and Lisa Camuso-Miller, Republican strategist, former RNC comms director, spent time working for a former Republican speaker. And Lisa, I'll start with you here. Are the shields up in the Speaker's office right now? They know something's going to come back they don't want.
I think it would have to be, right? I mean, Joe, I think more than anything, they have expectations. They've had a little bit of time to think about how they're going to respond to this. I think that they've known where the fault lines are. So the Speaker's office is already working behind the scenes to figure out what kinds of expectations they might have, what kinds of adjustments they could make to get themselves to a place where they could all get it done. It's going to be a challenge. There's no doubt about it. But I think Speaker Johnson knew that going in, and he's got the people around him that are going to help him get a compromise bill that's going to be able to get done and get signed, because they are really motivated to get this right.
We heard from Mike Lawler over the weekend. Jeannie, the Republican from your state of New York, says you hack up that SALT deal, I'm a hard no. And that goes for others in the New York delegation. That alone would sink the bill, right? We can only lose 3, I believe, is where we're at. What happens when the bill comes back to the House then?
Yeah, hands off SALT. It's become sort of a mantra around these parts and in other high tax places. And, Mike Lawler is speaking for enough Republicans in the House from these high tax states that it's going to be very hard to get their vote if they reduce the cap from what they agreed to in the House. The problem, of course, for the Senate is that they don't have people in the Senate GOP who are really focused on SALT or care that much about it, number one. And number two, they are really intent on doing some damage to SALT. And the White House, by the way, has said the president is okay with that. I mean, President Trump has been all over the place on SALT. And so if they do touch SALT, which I think they will, they're going to have to be very cautious, because they will lose the support in the Senate, in the House rather. That said, I think we're hearing that Mike Lawler is going to talk to Thune. He's going to talk to other senators and tell them how damaging this would be, and they will come to some kind of compromise, I think, on the issue of SALT.
How much communication, Lisa, is going on behind the scenes right now between Mike Johnson and John Thune, maybe among their teams, knowing, if we know about this, they sure do, to try to limit the number of changes, to ask for some grace when it comes to the bill coming back? Or am I crazy? The Senate always jams the House.
No, I don't think you're crazy at all, Joe. I think if anything, you're absolutely right. I mean, I don't think the principals are meeting. I don't think that the two, the two leaders will be meeting until we're getting closer to the end on this negotiation. But staff all day long are working together, not only at the highest levels, but all the way down into the committees to make sure that they're trying to find a way to get this right. And look, this is the way the House and the Senate do their business together. Do we knock on one another and say that they do work differently than we do? Yeah, absolutely. But the truth of it is that policy folks are working together to try to find common ground in order to get something that can get done and can get to the president's desk. And I do think that they're still really working towards a July 4th completion project.
Boy, that would be something. Chuck Schumer doesn't necessarily see it that way. And before we get to that, we're going to have to deal with rescissions, Jeannie. This is something that Democrats were at one time worried about, and I'm wondering if you are at this point, because there's not a lot there, and we've got $9 billion, $9.4 billion in the rescissions package. Remember, this is public broadcasting, USAID, a couple of other things, including PEPFAR. And now this is something that brings us back to the George W. Bush administration funding to help fight AIDS and HIV on a global level. There are a number of Republicans who are uncomfortable with cuts to PEPFAR, and now at least 10 moderate R's, Jeannie, are privately saying in the House of Representatives that they're a no. Is it possible that this thing goes down and not a dollar is rescinded?
I think it is possible. At least the PEPFAR portion will go down, and rightly it should. The damage done to people around the world from the perspective of their health, if indeed they do move forward on that, is so astonishing. It's hard to wrap your head around that being the thing that they cut or tried to pull back. So I do think that goes down. I don't think they will, fail to get even a dollar, but I think it's going to be much, much smaller, because the reality of this entire big, beautiful bill and the rescission package itself is it is damaging to the people who need the support most. And that is what makes it, for so many of us, such a deplorable bill. It is hurting the people who need health care. It is hurting the people who need medical care. It is hurting the environment, which we all depend on. I mean, you can go down the litany, all in the interest of giving tax breaks to big business and people who make a lot of money. So this is where they are, and it is devastating from so many perspectives. And that is just one example from the rescission portion. And I would just say that is why Donald Trump is so intent on pushing out pictures of what's going down in LA, because he very much doesn't want to talk about that, but he wants to talk about the fact this invests money in the border where he wants to make the case it is needed.
Remember when Mitt Romney was going to cut Big Bird's funding, Lisa? Turned out to be not the best time spent, considering the return you get on the dollar, to make that argument. Are we really doing this? We're going to defund PBS once and for all here.
I mean, it feels like that's where we're headed, for sure. And I think Jeannie's point is one to take. I also think that we need to consider that when you are asking so many vulnerable members of Congress on the right and the left, for that matter, to make these hard decisions in the reconciliation legislation, when it comes to rescissions, I think a lot of political capital has been expended already. And that's the other difficulty here, is that had we had this bill go through with pieces of good policy, I think that a lot of other folks would feel better about taking a sharper pencil to the budget and these opportunities that are coming through in the rescissions package. The problem is, I think people are going to be just downright tired and unhappy with the way these processes are moving. And so that alone makes it that much more difficult for them to get to a place where they can agree upon whether or not PBS should be part of the chopping block, PEPFAR should be part of the all of these things are just one blow after another that they know they're going to have to answer for when they go home in August, and when they have to compete for their seats up again in the midterms, which are just around the corner.
It is really interesting when lawmakers rediscover certain constituencies, depending on the debate here, Jeannie, you back off and look at what happened with the Doge, or I guess is happening. They continue their work in the wake of Elon Musk. But that's what brought us here. This was supposed to be codifying the work of the Doge, not $2 trillion, but $9.4 billion. You look at the big, beautiful bill, which was supposed to lower debt and deficits, and there are still a number of folks in Washington who will say, in the administration, Republicans on Capitol Hill will say that it does when you factor in certain levels of growth and returns from tariffs. But the Congressional Budget Office, every major economist, all of the think tanks here in Washington say that it'll add trillions to the debt and deficit. This cost-cutting thing, Jeannie, turns out to be kind of difficult, huh?
Yeah, it certainly does. And you can take any one of those areas you just mentioned, and we can talk about the impact on particular constituencies of these representatives and senators. But let's also look at the impact of the most vulnerable in our communities as it pertains to public health. This intent to cut and gut Medicaid and Medicare will be devastating in rural hospitals. It'll be devastating for large populations of elderly, young people. And then let's jump over to look at something we all should have an interest in, and that is something involving our environment, clean energy. We're looking at COP30 in November in Brazil, and we are going to apparently send a contingent to that, maybe go down there. If they pass this bill, they will have destroyed things that were intent on giving green energy tax credits and other avenues by which we could move to clean green energy and allow all of us to live longer and in a better and healthier state around the world. So the impacts of this thing are devastating from many perspectives. And yet you see, even Tom Massey says it's likely going to get through in some shape or another. And so it is something that, you know, you just watch it go on and you realize the devastation that is embedded in a bill this big in the interest of saving money for wealthy and big business. And that is I think, a tremendous disservice to the entire community.
Well, I know you've been through a few of these rounds, Lisa, when it comes to big promises and cutting spending, but it is likely that this bill is going to pass, at least in its current form, when it comes to tax and spend levels, minus some adjustments around the edges. The missing component is revenue from tariffs, according to a lot of Republican lawmakers who we talk to. Right now, the Trump team is in talks with China to try to craft a trade deal. How do these all reconcile, and will tariffs actually help to make the difference?
Oh, I mean, I think that that's the hope out of the White House. I think their expectation is that it will definitely make the difference. The other thing, too, is that, you know, when Jeannie talks about the fact that we have all these other things that are in the bill that are going to cause concern, if you walk outside of this beltway and you ask people out in the districts what they care about, they want change. And they're not really sure what it takes to make change, but they're willing to take a chance that these new unconventional ways are the ways to make change. And so they're not willing to take opportunities as it relates to climate change and other risky kinds of ideas that they think about until, in fact, their basic needs are met. And so if costs can come down, if tariffs are going to make that difference, I'm not really sure they care about how the sausage is made, Joe, provided that the change happens and happens in a way that helps them and helps their bottom line. So while we all existentially know that all of these other things that Jeannie mentioned are part of the bill and are problematic, people want basic needs met.
All right, Lisa and Jeannie will be with us in hour 2 here at Balance of Power, only on Bloomberg. world's two biggest economies try to hammer out a deal. Welcome to the Monday edition as teams from the U.S. and China meet in London as we speak. For the latest round, I'm Joe Matthew alongside Kaylee Lyons in Washington as we try to follow the beat on this, Kaylee. It won't likely spell the end of tariffs, but the S&P 500 is floating above 6,000 just like Liberation Day never happened.
Yeah, so maybe there is some optimism about some kind of breakthrough being able to be reached at this meeting, but it might not be so much as about the levels of tariffs as it is about export controls and the export specifically from China to the U.S. of critical minerals. That really seems to be the focus of conversation, as there's been reporting that President Trump is giving some leeway to his negotiators to actually loosen up the export controls the U.S. has in place when it has been trying to restrict Chinese technological development.
I'll be curious to see how far this goes, because when we start talking about chips, we're not talking about high-tech NVIDIA chips, those that are the building blocks to AI, but apparently we have been turning the screws on some lower level technologies that China wants to get its hands on. Kevin Hassett today describing this meeting as essentially a handshake to codify what's already been agreed upon, but we'll find out from Bloomberg's Anne-Marie Hordern, who's there.
Yeah, we will in just a moment. We also are, of course, following another story, and that is the deployment of National Guard troops in California, as we've seen some, at times, violent riots taking place across Los Angeles for the last few days after ICE raids, of course, started at all. President Trump, when speaking to reporters at the White House just moments ago, Joe, suggesting that after the California governor, Gavin Newsom, who did not want the National Guard deployed, threatened or dared Tom Homan to arrest him specifically, the president says he would do it if he were Tom.
It's a pretty wild moment as the governor of California calls the border czar a tough guy. We'll see what happens as we make our way through the day.
Indeed, we will, just as we are watching what happens as we make our way through the trading day. So with the latest on that, we turn to Charlie Pellet, who's up in New York for us. Hey, Charlie.
Hi, thank you very much. And here's what's going on London to Los Angeles. We got you covered here at Bloomberg. Also keeping an eye on WWDC, the Big Apple event, just getting underway. Tim Cook now taking the stage. Apple shares right now, they are trading higher, up by about 0.4%. U.S. stocks higher across the board, with the S&P up 15 right now, 6,015, up by about 0.3%. We've got the Dow up 41 now, up 0.1%. The Nasdaq Composite Index higher by 90, up by about 0.5%, with a 10-year currently yielding 4.47%. The 2-year 3.99%. All of this ahead of that key inflation reading on Wednesday. Spot gold is advancing $27 the ounce, 33.37, up 0.8%. And West Texas Intermediate crude 64.90 a barrel, up by 0.5%. Bitcoin up 1.5%, 107,795 on a Bitcoin. Warner Brothers Discovery says it will separate the company into two publicly traded businesses, splitting its streaming and studios business and its TV networks operations by the middle of next year. The streaming and studios company will include Warner Brothers Television, Warner Brothers Motion Picture Group, DC Studios, HBO, and HBO Max, and will be run by CEO David Zaslav. The new global networks business will include entertainment, sports, and dozens of other cable TV brands such as CNN, TNT, and TBS. Right now, shares of Warner Brothers Discovery, they're up by 1.2%. Again, recapping, stocks higher. S&P higher by 16, now up 0.3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. Back we go to Washington. Balance of Power continues, kicking off a new week, the Monday edition. Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet, thank you so much, and a very happy Monday to you as we kick off this new week in Washington with our eyes specifically on what's happening in London. Another round of trade negotiations between the world's two largest economies, the U.S. and China, remembering that an agreement was struck in Geneva last month to lower tariffs for 90 days. But it was a little bit fuzzy as to what else was part of that agreement, specifically what China was committing to in unrestricting exports of critical minerals to the United States. President Trump got Xi Jinping on the phone last week to try to clear that up. And of course, they're working on hammering out those fine details as we speak. The principals right now at this hour, Joe, still gathered in London.
That was a perfect setup. And Bloomberg's Anne-Marie Hordern is actually at the scene to carry the ball onto what happens next. Bloomberg's chief political correspondent outside that meeting. Anne-Marie, how's it going inside?
Well, they just arrived 5 hours ago, and they are still at the negotiating table. About half hour ago, we actually saw food delivery being brought in. So they plan, I think, on spending a few more hours here in London just past 6 p.m. So these talks are bleeding into the evening and potentially even till into tomorrow. What we do know from earlier, the NEC director, Kevin Hassett, talking about the fact, the contours potentially of this deal, easing some export controls that the United States has in place for semiconductors going to China. And then on the Chinese side, the U.S. wants to see more licenses when it comes to rare earths and magnets. They want to see an advanced pace that they thought they agreed upon in Geneva. The issue, of course, is what are the red lines for both of these economies? For China, it's clearly getting their hands on these advanced semiconductors, but how far is the United States willing to go? Say, are they willing to use potentially the H20 NVIDIA chips as a negotiating chip? And when it comes to China, how quickly are they really going to ramp up those rare earths? And I think what this shows you is that we are just 4 weeks out from when these two delegations met in Geneva. It just shows you how difficult trade negotiations are and reminds us all of how difficult it was for the purchasing agreement in Trump's first administration. That trade war started in 2018 and a deal wasn't in place until 2020.
Well, when we consider who is in the room today, Anne-Marie, obviously He Feng and Scott Bessent, Howard Lutnick are all there. Very high-level talks are taking place. But it was President Trump communicating directly with Xi Jinping by phone for the first time since assuming office for his second term that got our attention. Do we have any idea as to the extent to which this sets the stage for a face-to-face meeting between the two utmost leaders?
Well, that phone call definitely broke the ice. Remember, Secretary Bessent, after the Geneva talks, a few weeks after, said that he felt like negotiations were stalling. There was a phone call, and that really led to the path to have this discussion today in London. On that phone call, though, the two leaders did discuss visiting each other. So President Xi Jinping invited President Trump and the First Lady to China, and then President Trump reciprocated as well. So potentially that could be a deliverable or something that at minimum is discussed at this meeting. Also, Kaylee, it's a great point to mention that Commerce Secretary Howard Lutnick is here. He was not there in Geneva. He's in addition to this meeting, and I think that just basically tells everyone that maybe we don't know how far the U.S. is willing to go, but easing of export controls is on the table.
Fascinating stuff, Anne-Marie. We have to be honest, though, we're still biting around the edges of a much larger potential deal here when it comes to tariffs. And I know we're looking at a deadline in August on that. Would it be a win for this to resolve to another greater meeting on tariffs, reciprocal tariffs against China?
Yeah, definitely, potentially. I think they would love to wrap this up before August, right? Because they're also dealing with a ton of other countries. The issue is, to your point, Joe, is that these are just two issues at the heart of a very bigger deal. When I spoke to the Treasury Secretary weeks ago, he had talked about how they don't want to decouple from China. There is a grand deal to be had. Of course, the issue is each country has red lines, and the other country is trying to get past those red lines. And the problem is, if you're in the United States and you care about national security concerns, there's a potential limit that you're willing to go and give to China. And then China is going to use what their leverage is, say in this instance, rare earths. So this goes beyond just trade. This has to do with national security issues as well. And to think that potentially they can get this done in August, I think is very optimistic, given the fact that what we saw just from a purchasing agreement of agricultural products by large took over a year during Trump's first administration.
All right, Bloomberg's Anne-Marie Hordorner, chief political correspondent, live in London on the scene for these talks. Thank you so much. And we want to get more context and analysis now as we turn to Nazak Nakakhtar here on Bloomberg TV and radio. She's National Security Practice Group Lead at Wiley Ryan, also former Assistant Secretary for Industry and Analysis at the International Trade Administration. Nazak, welcome back to Balance of Power. As we consider what the U.S. may be willing to give here in these talks with China taking place today, a rolling back of export controls that have been concertedly part of an effort for the U.S. to restrain China's technological development. Where do you expect the line to be drawn? Are we really about to give them access to things that can help them develop the advanced semiconductors that we have been purposefully trying to make sure they cannot do successfully?
Yeah, Kaylee and Joe, great to be with you. Look, this is an incredibly complex issue, and it underscores a really important point. The fact that we have become so dependent on elements like critical minerals and the permanent magnets we need for our commercial sector, our defense sector, so much so that we actually have to give up a really important national security concerns, including dual use items. And I really want to stress the definition of dual use. Dual use items that China is seeking us to relax our export controls on are various types of AI chips, various types of chips in general, aerospace engine technology. And these are dual use because, of course, they have commercial applications, but they have enormous military applications, so much so that the government has decided to restrict them in the first place. So can you imagine this scenario where, because of our import vulnerabilities due to China's supply chains, we actually have to give up some of our critical national security concerns? The Trump administration is going to try to keep the wall up as much as they can and not give in to some of China's demands. But the Chinese are going to double down. It's going to be tariff reduction, export control, relaxation, and then potentially something about Taiwan, as China has signaled in the past.
This is where I start to get a bit confused, Nazak. It's great to have you back. If this is in fact a national security concern, why is it on the bargaining table?
You know, that's really because we are dependent on some critical supply chains from China that are also impacting our national security concerns. Rare earths that you all were just talking about, permanent magnets. Again, these are things that China controls exclusively the supply chain. And in order, I think some folks in the administration believe, in order to get our defense sector up and running, the commercial sector up and running with these magnets that we need, we're going to have to give some things up. The other interesting aspect of this that makes it extraordinarily complicated is our import dependence is just goods from China. What China is seeking from us is actually the know-how and technology. That know-how and technology that I hope we don't give up to China, and we maintain our export controls, that's long-lasting. Once you transfer technology to China, it's gone. You know, but China can always turn around and stop the exports of the things that we need, the magnets, the pharmaceuticals, to us at any time. And that's what I'm concerned about. Even if there's a handshake deal, even despite China's history of not adhering to deals, even if we get something, they can turn around tomorrow and block our access versus us having given up technology that now China can keep forever.
China, well, Nazak, one could listen to you and think that China is actually the one with all the leverage here. If they have a chokehold on this market that we need for our national security, if it's them that have the ability to just turn it on and off like a light switch, what hand does the U.S. really have?
You know, I think the U.S., if they really want to play it strongly, they can and not give up too much. In the pharmaceutical sector, one of the sector we have the know-how to make the drugs. I don't think we're as vulnerable as you know, some may think we are. And in terms of magnets, I mean, let's remember, we have a huge magnet supply chain that's growing. We have light rare earths in California, heavy rare earths in Canada. A number of magnet producers have invested in the United States are growing. But let's also remember, we can reuse magnets. We can take magnets out of phones, out of autos, out of defense equipment, and just basically remagnetize them and reuse them. And the reason I say all that is because, sure, it takes time to scale what we're building, our own domestic supply chain, but we're not at a loss. We can reuse what we currently have, and that gives us so much leverage to stay strong, to not give in to China's demands, because we're not as dependent as the Chinese like to think that we are.
Sounds like a good time to short magnets. Nazak, I wonder to what extent Jensen Huang will help to influence the outcome of this question, specifically over export controls and semiconductors. He's got the president's ear. We know they have a relationship. He's been to the White House, and he talked a lot just a couple of weeks ago about how these building blocks for AI should in fact be based on American systems, even if it's AI companies in China that are doing the work, that the American building blocks should be in place. If that's the case, we're about to see a loosening of export controls for the better, correct?
Well, we're in a situation where so many of our companies are now just developing and have been for a number of years so much revenue from China that cutting off access to that market could be pretty much short term, you know, in their view, catastrophic for them. At the same time, again, they're asking the U.S. government to continue the exports of dual-use items that are aiding and abetting Chinese military. Even if we, the United States, build massive data centers in China, the Chinese are using those data centers for AI capabilities that augment their military. And the way China plays is, if you build it in China, you have to transfer technology to China. To me, it's a high-risk proposition that we're continuing to transfer all of our technology to China when China just doubles down, pours more money into it to indigenize it, and more people and resources. We saw what happened with DeepSeek. We saw what's happened over the last 15 years. China has accelerated its growth in technology from virtually being a really sort of developing country, not technologically advanced at all, to the technological powerhouse that it is today. And that is because we've been transferring our technology. And I think it's really time for the Trump administration to, one, take a second look as whether we want to give up more, and two, remember that we're not as dependent as some think we are.
Well, so Nazak, when we consider the time here for these very complex issues to be fully worked out, I don't know the extent to which you expect there to be firm, tangible outcomes of this meeting in Geneva, but knowing we are up against a deadline in August here of this 90-day window in which tariff levels have been brought down from the astronomical highs with which they were, is that enough time for the U.S. and China to really get into the nuances of all of this different policy, or are we just going to have to keep buying ourselves more and more extensions?
You know, I think the likelihood that they're going to get out with, they're going to leave with a handshake deal is very likely. I think we're going to end up reducing some of our export controls, maybe on chips, chip technology, AI chip technology, the commercial aircraft engines that we've recently prohibited the exports to China. And you know what? China's basically going to say, fine, you can have more magnets. But China is probably not going to allow our military sector to have magnets for our defense and weapon systems. And, what good is a handshake deal when we have a country like China that's systematically broken deals? WTO commitments, its bilateral, cybersecurity deal in 2015, phase one deal, the Geneva deal. So yes, I think from China's perspective, it's going to give in, after a little bit of acting tough, it'll give in a little bit. It'll say, fine, I'm going to license these things to you. We're going to reduce our export controls. And I am confident that within a month, we're going to find ourselves in a very similar situation, not getting the things we need from China. And then it's going to be a really tough call for what the administration is going to do next.
Sounds like reciprocal tariffs are not going away anytime soon.
I think that they're going to stay. And look, they were having a real dire impact on the Chinese economy when they were in the high double digits and triple digits. And I think that if the Trump administration really wanted to bring China to its knees, it could have kept the tariffs on for slightly longer. Of course, that also adversely impacted American industries. I think we're going to be doing this song and dance for many, many months ahead until one of the countries capitulates.
Nazak, great to have you back. Nazak Nakhtar, National Security Practice Group Leader, Wiley Rain, LLP, former Assistant Secretary for Industry and Analysis at the International Trade Administration. Always a great conversation. Kaylee, we'll find out maybe by the end of the day if we get a readout from either of these teams on what happened. But Anne-Marie says they're bringing in takeout. This may not end anytime soon.
Yeah, that's never a good sign if you're looking for something to wrap up quickly when they bring the extra nourishment in. But we'll continue to keep you updated on what's happening in London and what's happening in Los Angeles. That's where we turn to next as we consider President Trump deploying the National Guard without the say-so of California's Governor Gavin Newsom. We'll have more with our political panel next here on Bloomberg TV and radio.
121 on Wall Street. We do check markets all day long here at Bloomberg. Apple shares just turning negative. Tim Cook speaking at WWDC. We've got Apple unveiling a new operating system interface called Liquid Glass. This is the Worldwide Developers Conference, calling it the company's broadest design update ever. Company also confirming plans to open up its AI models to outside app creators. But bottom line here, Apple shares are now trading lower, giving up earlier gains, down now by 1.1%. And our Ed Ludlow will have a lot more for us coming up in just a moment right here on Balance of Power. Again, Apple right now down 1.1%. This on a day when stocks are advancing. The S&P up 13, up 0.2%, with the Dow now up 61, up 0.1%, and NASDAQ higher by 0.4%. The Bloomberg Mag 7 index holding on to a gain of 0.5%, with the 10-year at 4.47%. Spot gold 33.35 the ounce, up 0.7, and West Texas Intermediate crude up 0.4%, 64.83 a barrel. So stocks higher, Apple lower. Apple down 1.3%. Balance of Power continues right now, and back we go to Washington. Once again, your hosts, Joe Matthew and Haley Lyons.
All right, Charlie Pellet, thank you so much. Checking on the markets for us from New York. Meantime, we're checking on all things politics and policy for you from here in Washington. And a lot of that conversation today centers around what's happening in California, where the governor, Gavin Newsom, has threatened to sue the Trump administration after the weekend deployment of National Guard troops, a federalization of the National Guard that President Trump decided to move forward with without the permission of the state's governor. This in response to the protests that were seen getting violent over the weekend in and around Los Angeles over ICE raids. This is the first time, Joe, we have seen something like this in 60 years in the United States of America. The last time this happened was in 1965 when LBJ deployed National Guard troops in order to protect civil rights protesters in Selma.
Yeah, in a very, very different scenario.
Yeah.
Gavin Newsom writing on X, "We did not have a problem until Trump got involved." He calls it a serious breach of state sovereignty, inflaming tensions while pulling resources from where they're actually needed. Kaylee, we heard from Donald Trump today as well. Yep. He made a couple of brief remarks in the driveway, but then took to Truth Social for a pretty long post here, beginning with, "We made a great decision in sending the National Guard to deal with the violent, instigated riots in California." He says if we had not done so, Los Angeles would have been completely obliterated. Remembering, of course, this was isolated to a fairly small part of town. Let's assemble our political panel to talk about the fallout here. Jeannie Shanzano is with us, our Democratic analyst, Bloomberg Politics contributor with the Center for the Study of the Presidency and Congress, and Republican strategist Lisa Camuso-Miller, former RNC communications director and host of the Friday Reporter podcast. Lisa, is Donald Trump right? We made a great decision in sending in the National Guard to deal with this?
You know, Joe, it's inconsistent with the way Republicans have always operated, right? They've always allowed the governors to be the senior executives in their state, and ultimately that's what it's supposed to be. That's how it's supposed to work. So the fact that he went over Gavin Newsom's head and made that decision really shows that he's played politics here. Now, there's plenty of people that have points of view about how the governor has handled these kinds of circumstances, but we've rarely ever seen, as you said, it was LBJ that did this however many years ago. And so this alone has me concerned to some degree because it is consistent with traditional Republican policy and the way that we've operated previously. And it's the other thing is that it now has Americans pitted against Americans in a time when that is the last thing we need to see happening here. And so I don't know. I think LA's got enough problems as it is. The fires were just a minute ago, and here we go again with the president stepping into state politics at a time when, I don't know, to me, it just seems like a little bit, I don't know, wrong path for me in my point of view.
Well, when we consider, though, the kind of way in which this changes the administration's messaging, Jeannie, we go from talking about Trump's fallout with Elon Musk and all of the kind of social media-driven frenzy around that to something that President Trump actually wants to be talking about, crime and immigration. Does this not work for him in changing the narrative? Is that not what he's trying to seize on?
Absolutely, it works for him. And that's why we've seen him all weekend truthing away about this. And of course, anybody who followed him closely on the campaign trail, he said he was going to do this. He said he will put in the National Guard. He will call them out regardless of whether he's asked. He even talked about sending in troops. So nobody should be surprised if that happens. It's not just going to happen in LA. It will be Chicago. It will be New York City. But let's not forget what undergirds this is Stephen Miller in May, his advisor, went to ICE and said, unless you get to a quota of 3,000 a day of people that you are going to deport, we will start firing people in ICE. And what that has meant is that ICE has had to go for what they describe as the low-hanging fruit. It is far easier to catch people who are law-abiding, who are going for their check-ins, who have ankle monitors on, who have alerted the government to where they are, rather than going for criminals, who are hiding, and it takes a lot more resources to catch. So one of the big questions Donald Trump needs to answer is why, after saying repeatedly they would go after criminals, isn't he doing that? And is he going after people's workers, friends, families, and neighbors? That's what set off the demonstrations in LA, and that's what's going to continue as they struggle to keep up with this quota that Miller has set.
President Trump was asked on his way out of the White House this morning, Lisa, about this idea of having the governor of California arrested. Gavin Newsom is daring Tom Homan, as we saw on cable news last night, to come and get him. He called Homan a tough guy. The president was asked, should he do it? Donald Trump, quote, I'd do it if I were Tom. I think it's great. Gavin likes the publicity. What would be the impact of a move like that?
I think it would change precedents for forever, Joe. I think that it's the kind of thing that the president seems to be happy to have these kinds of debates and these kinds of discussions and offer up these kinds of distractions. And I think your point is good. I think he wanted to get the discussion centered around immigration and crime and his toughness on those issues. And the fact that he is inciting a back and forth between himself and the biggest state in the nation is one that I think is concerning. And I think Jeannie's right. It should send a message to a lot of other big cities all across the country that they need to be mindful that this could be coming for them next.
Well, and of course, this isn't happening in a vacuum. It is also happening, to get back to the idea of the feud with Elon Musk, Jeannie, as the president is trying to get his one big, beautiful bill through Congress. And White House officials, administration officials, from the press secretary, Caroline Leavitt, to the Treasury Secretary, Scott Bessent, are being very quick to point out on social media today that that bill provides funding for 10,000 new ICE personnel, 5,000 new customs officers, 3,000 new Border Patrol agents. Does what we're seeing take place out in California actually make it easier for the president to make the case Republicans need to get this through quickly on those grounds?
Absolutely. I'm so happy you raised that, Kaylee, because this is one of the things that the president wants to do, is to use these pictures, and they are horrendous, and Democrats and Republicans need to speak out vehemently against any use of violence. He wants to use these pictures to say this is a key reason senators and representatives on the GOP side to support this bill. He keeps talking about an insurrection. He keeps talking about a crisis, and we do indeed have an immigration crisis. We've had one for decades. And he wants to use these pictures and this insecurity to give representatives and senators a cover to tell their constituents, I know there's some things in this bill you don't like, but we had to do this because we are in a crisis. So that is absolutely what they are using. And it is a good way to turn the page from thinking about debt and deficit and all the cuts to spending and the things needed for the most needy among us, and to focus on a crisis and get this bill through.
It would be a new level to see not National Guard troops, but actual members of the U.S. Marine Corps. Lisa, Pete Hegseth, Defense Secretary, issuing a statement to say if violence continues, active duty Marines at Camp Pendleton will also be mobilized. They are on high alert. I don't know what kind of alert that actually refers to in a case like this, but apparently 500 Marines have been earmarked by the Defense Secretary. You don't believe he would do that, do you?
I think anything's possible, Joe. I really do. And I think that this is a time when the administration seems empowered. They feel empowered, and they feel like there's an opportunity here to set a precedent and show an example about how it is that federal force can make changes in the states. And that's something that I think Jeannie's point is right, is that Republicans and Democrats need to be mindful of that, because that's precisely, it seems like, the direction that the administration is pointing towards at this time. And it's one that I think that, as I said, it is unprecedented, and it will set the course for action in lots of other states and cities all across the country.
All right, Lisa Camuso Miller and Jeannie Shanzano, our political panel here on Balance of Power on this Monday as we watch a fourth day of tensions in LA. Thank you so much. We appreciate your time. And of course, that's not the only thing we're watching in California today. As about 350 miles north of Los Angeles in Cupertino, California, another important event is taking place. The Apple Worldwide Developers Conference is underway, got going, at least the presentation of the new stuff got going earlier this hour, and shares are falling as it continues, down about 1.6% right now. So let's go out to Cupertino. That's where we find Bloomberg Technology co-host Ed Ludlow, who is joining us now on Balance of Power. So Ed, what are we learning at this conference?
Well, we're learning, if you look at the stock, this is a kind of sell the news moment, right? Because what we are getting from Apple at WWDC is kind of exactly what Bloomberg's Mark Gurman reported. It centers around a redesign of the OS interface called Liquid Glass. And what Apple hopes to do with this redesign is make all of its operating systems more in line with one another, but also reflect some of the work they've done with Vision Pro, their augmented VR AR headset. Sell the news also in the fact that early in the presentation, what Apple said was that they will be talking about Siri, particularly like the consumer-facing element of Apple Intelligence, throughout the course of the year, but indicating they don't have anything of substance to say it today. And you'll be reading on the Bloomberg about how year-to-date this is a stock that's down 18%, right? But it's largely traded on trade and tariff risk, not on the AI story. So there's an element of disappointment here. We didn't get more. There was some AI news, though, and this is the developers conference, right? WWDC is for the developers. And what Apple said was it will allow third-party developers to build their software and their applications on top of in-device LLMs. That's a really big step when you consider the history of this company and how big a role developers have in the kind of value add of any technology company's ecosystem.
I do find it fascinating, Ed, that Apple is frequently punished for lack of, in the case of today, a big announcement about AI, but then the stock is rewarded when people start to freak out about a potential downturn in the AI spend and they see Apple as being on a safe island. But how would you describe the company's approach to AI right now?
Yeah, it's really interesting because the Bloomberg terminal can let you look back at history at periods of economic pressure or sort of volatility in marketplaces. And Apple has an entrenched market position. It has a very strong balance sheet. And quite a lot of the time, investors are sanguine about the direction of where they're going. The issue is that, you know, consumers' motivations are now driven by different things, and how they interact with AI, so to speak, is a big factor in when you decide what smartphone you're going to have or what laptop you're going to have. And the issue is you can get a very competitive offering from ChatGPT, owned by OpenAI, or Gemini, made by Google, and you can use it on your iPhone or on your MacBook. And Apple, therefore, on the services side of its business, on the software ecosystem, is getting a little bit squeezed out of its own game because of those competitive offerings. Hence, sell the news today, but they're also disappointment they didn't say more.
Always great to spend time with Ed Ludlow. Ed will be back as the headlines fly next hour on Business Week Daily with much more coming out of the Developers Conference. Bloomberg Tech co-host Ed Ludlow. I'm Joe Matthew alongside Kaylee Lyons in Washington. We're going to dig more into the legal basis for what we saw took place in L.A. over the weekend. Robert McWhirter, he's coming up next on Bloomberg.